Good morning, everyone. My name is Sebastian Edwards, and I am the faculty director of the forecast. I've met many of you, but not all of you, so it's good to meet you at least in this way. I've been at Anderson forever. Okay, I am, with all likelihood, the most senior professor here. That doesn't mean that I am the oldest, but I am the most senior professor here. I've been at UCLA since some of you were not born yet. I've been here as a faculty member since 1981. Okay, so if you tell me what's the which is going to be one of the topics we're going to be talking about today, what does the Olympics do to LA? I lived through that. Okay, I know what happened then. First Olympic that I lived in LA, LAX did not have an upper path to go around for the cars. They built that for the Olympics. So the West Side Pavilion, that now is going to be a UCLA building, they are refurbishing it, did not exist. You guys don't remember that because you were not alive, but I was here. Okay, and moving from Chicago to LA was a cultural shock that took some time. It took me and my family some time to absorb, but once that happened, we were addicted to Southern California, and we haven't left. We've lived through everything, including our house, by a miracle, was spared in Altadena. Not our house, but our son's house. There's only one block surrounded by what I called Dresden, Germany, May 1945, totally leveled off. And our block, the whole block, was spared just by, it took us 6 months to be able to go back to the house, but so we've lived through everything, and we are very happy to have you here today. It's a very, lots of things are happening. Our economists, Clement Bohr and Jerry Nicholsberg, had everything ready, and then a war was started. I haven't asked them if it was within the radar. I just want to hope that it was there, but not to high probability, so they didn't put it in the agenda. So we're going to talk about a lot of things that are happening in the economy, both now, the next 6 months, or short run. We're going to talk about the World Cup. I want to be very clear and upfront and transparent regarding that. I am for Argentina. Okay? I am not from Argentina. In fact, I was born in Chile, west of Argentina, and I am thus supposed to hate Argentinians. But I don't. I just love Argentina. I'm one of the, Chile has 20 million people, and I think that there are 4 of us who do not hate Argentina. Okay, so something else, we're going to talk about Hollywood, and Jerry has a good, optimistic forecast for Southern California that is based on Hollywood. I just want, for those of you who follow the movie scene, I met Pedro Pascal, who is a Chilean American, when he was 1 year old, and I saw him grow. So I was a very close friend of his mother. So Pedro Pascal, one of the today most famous and acclaimed actors, so you can see him in the movies everywhere, and SNL, great skits with Benito, also known as the Bad Bunny, and with another very funny Hispanic, Marcelo Hernandez. So I've known Pedro for a long time. So, and Jerry's going to talk about Hollywood. We're going to have Rick Caruso, and I'm going to interview him. That's going to be one of the highlights. And we are going to talk about not only the World Cup, but also the Olympics. And Kathryn Schloessman is going to, who is in charge in Southern California of all these amazing events, is going to talk to us about the Olympics and the World Cup. So thank you for coming. And without further to say, I will turn the mic to my colleague, Clement Bohr. Thank you. Oh, no, Clement, you see, I have to, Seth was about to have a heart attack. I have to read the list of our sponsors, right? And Seth has been asking me to go through it. So sometimes he's a little confused with my accent. I could tell lots of stories about my accent, but for some other time. So our sponsors at the principal level, RSM, Yamava Resort and Casino at San Manuel, platinum level, the law firm of Allen Matkins, Cathay Bank, the Federal Home Loan Bank of San Francisco, Mercury Insurance, the University Credit Union, which goes, as I learned last time I met with them, it now covers not only the university, but other institutions. It's a great story there. Gold level, Alaska Airlines, Bank of California, Hub International, Leap Development, Numa, PNC Bank, Robert Half, SMBC, Manual Bank. Silver, Slalom, where Seth insisted that this is slalom like in skiing, and that I should pronounce it correctly. I think I'm doing that, but he disappeared. Just tell him that I'm doing okay. US Bank Private Wealth Management, Wilmington Trust at the bronze level, Accutive Security, BMO, HDR, the Port of Long Beach, Q2, Shomat Design and Construction, and at the Bruin level, fifth third bank. Okay, thank you so much. And now, Clement, please take it over.
All right, well, thank you, Sebastian. And to answer his initial question, of course, the war was on our radar, as it was probably on most of our radars, but there's a particular reason why it wasn't our radar, and that is that this is not the first time the administration decided to bomb Iran the weekend before this very conference. It happened back last June as well. So this is turning into a pattern for us at UCLA Anderson Forecast. Yeah. So if you have the good fortune of being with us at the December conference, you might remember this cartoon that I started out with, where I basically turned off the lights on the US economy as a metaphor for the government having shut down, which inhibited a lot of the data releases coming out for the US economy, which meant that a lot of us economists were in the dark. Well, it's a new day. Unfortunately, it's a new year, and things have changed just slightly, and the outlook has turned much more positive. And the big difference that you see in this cartoon is that the tariff elephant, which was in the room before, has been replaced by the One Big Beautiful Bill Act, right? So instead of the tariffs, which I'll talk about in a second, putting more downward pressure on the economy, we're turning to a regime or a shift where we're going to have a lot more fiscal stimulus coming in from these tax cuts that are starting to affect the economy. And on the other hand, we still have a lot of additional AI stimulus coming in from the big tech firms building out these data centers. And in the background, you have the Federal Reserve looking out the window rather than before, manically trying to lower interest rates because of the deteriorating labor market. So there it looks like they may have done enough for now. If you see the dial in the room, the temperature of anything is a little bit hot. So they're taking their hands off the controls and at least for a little bit and seeing how the US does over the next half a year or so. And there is one big elephant that's missing in this now, which is the war in Iran, right? And that can certainly have very large effects on the US economy. And I'm going to talk about that at the very end, but it is not in our baseline forecast because even at this point, it's still very speculative whether it's going to peter out very quickly or if this is going to be a very long sustained war, right? So keep that in mind that the numbers you're going to see throughout this do not have an Iran war in the picture, and that could change the forecast dramatically. So I'm going to start with the tariffs. It's been about a year since they were beginning to be implemented, and that means that we're actually beginning to get a fuller picture of their effects. And to summarize it, we can see that the average tariff rates in the US economy went up by about 10 percentage points from 3 to 12%. And we also have very good data now that shows that about 90% of the cost of those tariffs have been borne by their US households or businesses. And if you combine that with also knowing that tariffs or the imports make up just over 10% of the average household's consumption basket, well, then you can back out. You should expect that the entire effect of tariffs should be about 0.9 percentage points increase in prices. That should be the total effect on inflation. And the Harvard Pricing Lab actually calculates like a real-time estimate of the effects of tariffs on the US economy. And that just hit 0.9 percentage points over the last month, which should signal that we're mostly there. Like we should be about there in terms of hitting the peak impact from these tariffs. And here I'm showing you on the right-hand side a plot of the US CPI, the Consumer Price Index, inflation rate of that. And you actually see that that peaked back in October. The gap in that data there comes from the shutdown, right? So it peaked right before the shutdown where it was reaching 3%. And that yellow bar is where you see the impact of the tariff. That's the rise in prices from goods, food, and energy. But we had the shutdown that led to some missing data. And since the shutdown, the CPI has also been flawed because of issues that happened during the shutdown with respect to especially with the cost of housing, but also some other issues. And so fortunately, we have a different consumer price index you can look at that's called the personal consumption expenditure. That's actually the price index that economists prefer to use. That's the price index that the Federal Reserve uses when they want to conduct monetary policy. And so what I'm going to do is I'm going to plot that mirrored in the negative directions. We can compare it to the CPI. Okay? So what I'm plotting downwards is still positive inflation. It's just going downwards instead of upward, right? And you see that the personal consumption expenditures price index looks very similar to the consumption price index, right? Overall, it's the same pattern, but the details differed in very important regard if you look recently, which is that this one has not peaked yet, right? This yellow gap where the tariffs are showing up is still rising, meaning that, you know, we probably haven't quite seen the full impact of the tariffs there yet. And there's one good reason for that. And we have a lot of reports which show that firms have been waiting until the new year to raise their prices. A lot of firms, they wait, they only renew their prices about once a year, and they usually do that in the first quarter of the year. So a lot of them have been holding off on raising prices. And so we do expect this sort of final burst in this first quarter of 2025 of tariff impact. The other thing I really want to point out in the downward looking plot for the PCE is the light blue bars. If anything, you look there, they have stopped shrinking. You really have to squint to see it. They have been steady and actually growing over the last 4 to 5 months. That is services inflation. That is still elevated, and there's no downward pressure coming from that. And as I already mentioned or alluded to, we're expecting stimulus, like a good economy in 2020, stimulative. So there isn't any like foreseeable downward pressure on these prices coming in the future either. So this is going to be a pain point going forward is services inflation. And the last thing I should mention about tariffs before moving on is that we did have a very important ruling from the Supreme Court about 2 weeks ago, which is that they overruled the tariffs that the administration imposed under the International Emergency Economic Powers Act, right? So what this means is that at least in the short run, there's going to be a lot less tariff uncertainty from day to day because the administration cannot just yield tariffs, you know, idiosyncratically on whatever country they like for whatever reason they want. They don't have a carte blanche to do this anymore. But in the long run, there's still a lot of uncertainty about where the tariffs are going to end up because they do have a lot of other trade acts they can use, but these trade acts take time to implement. So they can claim that there's a national security issue, that there is an unfair trade issue, but that has to go through a rigorous process of being validated before you can impose tariffs related to those. So in the very short run, we have less tariff uncertainty, but you know, going down a year's time, we don't know where the tariffs are going. Turning to the labor market, that's another place where you've seen the effect of tariffs as well as the other government policies. And what I'm showing you here is average monthly job growth over the last couple of years. And what you see throughout that time is that it's been steadily declining, you know, back from about 250,000 jobs growth in 2023 down to basically zero at the end of 2025, right? And if you asked an economist back in 2024, they would have said, this is going to level out at around 100,000 jobs, right? But that didn't happen. It continued to decline. And you can see very clearly why that decline happened in 2025. It's those purple and gray bars that are negative, pushing it further down. That's layoffs or less jobs in the goods and manufacturing industries, largely due to tariffs. And it's the layoffs in the government, largely due to DOGE. So there you can see what's really been putting downward forces on the labor market in terms of the demand side. It came from the tariff policies and the government policies in terms of reducing the size of the government. Now, Jerome Powell, the chair of the Federal Reserve, has called this labor market a curious kind of balance because this was largely offset by a similar decline in the growth in the supply of workers. That is, the labor force is also gradually declined in its growth rate. And you see that it's almost declined, 1-for-1 up until very recently. And you also see why it's declined. It's those yellow bars that switched from being positive to then in 2025 actually being negative, where the yellow bars represent the contributions of the foreign-born workers to the labor force, right? So this is the immigration and deportation policies in action. And this is not just, fewer people coming into the country or people leaving the country. It's also, immigrants in the country deciding not to work for fear of being deported, right? So there's also the labor force participation rate aspect in this, which also led to those further declines. And I think it's a bit too much of a compliment to the labor market that Jerome Powell called this a balance, because it really hasn't been in balance. It's deteriorated gradually over the last half year or so. The unemployment rate rose from 4 to 4.4% over the last year. And basically all the job gains we did get were in healthcare. So that green bar, that services providing industries, that's basically all healthcare jobs, right? And so Jerry is going to talk much more about the industry level, which industries have been adding jobs and how that's been gradually changing very recently. But, at the wide and from broad perspective, I would not call this labor market healthy, at least. On a more positive note, GDP growth held up very well in 2025. This is not headline GDP growth, because headline GDP growth is very volatile, and so it's hard to see the signal from the noise in that. It's very volatile because imports and exports have been very volatile, especially in 2025, and change in inventories are also very volatile. So what economists like to do is they like to strip out those volatile components to get a better sense of what's actually happening to the growth rate. And that's core GDP growth here, which is the black line. And you see that averaged about 2.5% through 2025, which is only slightly lower than what it was in 2024 and 2020. So overall, very good, robust growth in the above 2% range. But if you squint, you can see that the bars that make up that black line, which are in blue, yellow, and gray, look very different in 2025 than they did in 2023 and 2024. First of all, you can see that the light blue bars are much smaller, right? That's consumption growth that comes from goods. So again, the tariffs have raised the cost of goods consumption, which has put downward pressure on the growth rate and our consumption expenditures on that. You also see the large negative gray bar in the fourth quarter that's downwards. That was the government shutdown, right? So that really reduced expenditures by the government in the fourth quarter of 2025. And then you see the big yellow fat bars, right? That's high tech investment. That's very different from what we had in the past. That is the big tech firms spending oodles amount of money developing these, the AI-related infrastructure, the data centers and the likes. And if you aggregate try and quantify it, what amount that big tech spending has been in terms of the share of core GDP growth this year, it was about half of it, almost half of it. Right? So a large amount of the GDP growth at the core level came from these AI expenditures from the big tech. And the big question is, well, how long can this persist, right? What's going to happen in the future with these big AI firms spending? And at least for 2026, the answer is they're going to do a lot more. It's going to grow a lot more. So you're going to see big yellow bars in 2026 as well. In 2025, the aggregate capital expenditures by the big tech firms, also known as the hyperscalers, was about $400 billion. They've already projected and said that they're going to invest about $660 billion in 2026, right? That is about 2% of GDP. That's a 50% increase from their investment expenditures last year. It's a huge amount, okay? But then the question is, can it go on for much beyond that? And the answer is, well, probably no, because at this level, these investment expenditures make up about 90% of these firms' cash flow, so they really don't have much more runway to go. And also, when they announce these large increases in investment expenditures, the stock market did not look favorable, right? So before, when they've announced these large investment expenditures, their stocks values rose, but this time they actually declined by 5 to 10% for a lot of them, showing that investors, are looking a little bit more skeptically on whether they're going to get a positive return on investment at these, very high levels. So we do expect, going forward that there basically isn't very much more runway to go, and so it has to moderate at some point. And you may be a little bit confused from what I mentioned in the last couple of slides, which is that I told you that the labor market has been deteriorating, but GDP growth has been holding up well. So how can that even happen, right? And that's what I want to show you here on the scatter plot, which is called Okun's law. That's that black line there. And that generally tells you that when GDP growth is high, that leads to lower levels of unemployment. And when GDP growth is low or when to the left, that leads to increases in unemployment, right? Very naturally, you have this relationship between the labor market and GDP growth. And sorry, the screen is fast enough a bit. And what you see in 2025, in the middle of the second and third quarter, we had these two blue dots. That's where we were. We were above this curve. That is levels where we're actually seeing high GDP growth, but also increases in unemployment, right? The only way that can happen is from productivity growth, right? We're producing more with the same amount of workers or less workers. So every worker must, on average, be producing more. That's just accounting, right? But it's also important to, reason why I made this plot is that the levels of productivity growth we have right here are good, right? They're above average, but they're not extreme or excessive. They're modestly high levels of productivity growth. You see these points are in the cloud of the historical data points, which are the black dots. So there's nothing, historically anomalous about where we are right now. The other point is that GDP growth is very volatile, as I mentioned on the last slide. And so if you look at the first quarter, we were all the way over in the yellow area. And if you look at the fourth quarter, we're very close to this black trend line. So, on average, we're pretty close to the actual trend line. And so you shouldn't read too much into any announcements about any single given GDP growth level for any given quarter. It's better to try and get a sense of the longer run perspective of what's happening. Now, I've told you a lot of statistics and accounting for what's happening with productivity growth right now. At a more intuitive level or practical level, how can this be? Right? Well, we have these big AI capital expenditures. A lot of that revenue goes into NVIDIA's profit margins, not into more work. Okay, so there you see that boosts GDP growth. It doesn't boost the labor market. So I just gave you a lot of background on how the economy is doing. How has the Federal Reserve responded to a deteriorating labor market? They've also faced immense political pressure, if not outright political attacks. And they've had to navigate all this with missing and flawed economic data. So it's not surprising that they decided to lower interest rates by 75 basis points, as they really wanted to sort of get ahead of any more deterioration. But they may have gone a little bit ahead of themselves because we also still have rising inflation. That might get even worse now with the war in Iran. But we also have strong, robust GDP growth. And we have, continued exuberance in financial markets. There doesn't seem to be many issues there. And so the tunnel that I'm showing you here on the plot tells you a simple prescription for where interest rates should be, which would be appropriate for the level of unemployment and inflation in the US economy. And when you start getting out of that tunnel, going down into the blue area, that signals that monetary policy is going into an area that shows that they're not really putting much weight on inflation at all. They're really just worrying about the labor. And so that should be a little bit concerning, considering we still have elevated inflation with more to come. The last place we're going to get stimulus, not just from monetary policy, is from the fiscal stimulus, primarily the One Big Beautiful Bill Act, right? So these are the tax cuts that were passed through Congress last summer. And they aren't just tax cuts, there's also new spending there, specific on border and defense in particular. And then some of the tax reliefs are incentives for higher investments, such as 100% bonus depreciation on equipment and construction for manufacturing as well. And you can actually call the One Big Beautiful Bill Act for 2026 sort of a double stimulus, because not only are we having lower income taxes on the income we're earning right now, it's a retroactive bill for 2025. So we're also going to get larger tax refunds for the taxes we paid last year that ended up being too high relative to the new tax code. And so those things combined are going to lead to, as I'm showing you here in the plot, about 0.5 to 1% increase in GDP in terms of stimulus for 2026. Now, because of the overruling of the tariffs, we might also get stimulus from the tariff refund, right? So they generated a lot of tariff revenue from these tariffs, about $150 billion, which is about 0.5% again of GDP. And this needs to be refunded. So that can lead to additional stimulus this year that is substantial. But this is going to not be an easy refund process. They've already shown they're going to basically, fight it and drag their feet on it. And so whether this is going to be, played out through 2026 and 2027, it's unclear what the time frame is going to be, right? This is going to have to be weeded out by the courts, the International Trade Court, and it's going to be a complete mess. Because if there isn't a process from the administration about how to refund this, every firm has to, seek their refund individually at the court. And that's going to be hundreds of thousands of requests for tariff refunds. And this court has no capacity to manage that influx of refunds. So it's going to be a complete mess. It could take years to weed all this out. The last thing I want to mention in this plot is that you see in 2027, the stimulus actually goes from positive to slightly negative, right? That is because a lot of the spending provisions, the spending cuts in the One Big Beautiful Bill Act, such as cuts to Medicaid and SNAP, they don't take effect until after the midterm. So we're only going to really see the implications of those into 2027. So this year, a lot of stimulus. In 2027 is going to turn to slight contraction instead. And so, with all that being said, what does this mean for the actual U.S. economic outlook? That's what I'm going to wrap up. We do expect the unemployment rate has peaked. So the labor market, we do think, has deteriorated to the worst it's going to be, and we're going to see gradual improvement. It actually peaked in October at 4.5. Sorry, in November at 4.5%. It's already at 4.3% here in January. These numbers do fluctuate a bit from month to month, but we do expect a gradual improvement down to 4.2% because of all this incoming stimulus, and it's going to be somewhat stable. We also expect inflation is not at its peak yet, but nearing its peak. I already talked a lot about that. But importantly, we don't expect this to dissipate very quickly after hitting the peak. We expect inflation to remain in the 2.5% to 3% range for much of 2026, right? There's a lot of stimulus keeping prices elevated. We have tariffs that are still affecting the economy. Now we may have an oil price shock as well. And as I mentioned, services inflation is still running hot as well. So we don't expect inflation to come down quickly after peaking. Even after 2026 and 2027 and 2028, it's going to be a gradual decline towards it. On interest rates, we already have on the short end, the federal funds rate, which you see all the way over on the left plot here. The blue curves are past interest rates, and the yellow curves are future interest rates. And you see we've already come down quite a bit there with 75 basis points last year. We do expect them to continue to come down, but at a much slower pace. As I mentioned, there's a lot of stimulus coming in. Inflation is still hot, and so we don't expect any interest rate cuts from the Federal Reserve, at least for the first half year. Maybe when the new chair comes in, Kevin Wark, the Federal Reserve will have a cut in June or the meeting after, and then maybe another one by the end of the year. But this is very dependent on what happens with inflation going forward. And there is a lot of factors there that could pull inflation direction, right? So at least in the very near term, you should not expect any interest rates cuts. But even over a longer term, it's a bit unclear how quickly these interest rate cuts. And on the longer end, if you look at a 10-year Treasury, that's been basically hovering in the 4 to 4.25% range over the last year, and we expect it to remain around there for the foreseeable next 6 months or so to a year, and then gradually start going upward. If there's any pressure on long rates, it is in the upward direction. We have a very large U.S. debt for more than 100% of GDP. We're running deficits of the U.S. government about 6% of GDP. We only usually do that during recessions, right? And these deficits are not going down or getting anything bigger or staying around 6%. And the U.S. debt is going up because we're adding these deficits to it. And even just servicing the U.S. debt adds additional debt that we have to pay, right? So that has the snowballing effect. And the new Fed chair, Kevin Warsh, if anything, has signaled a policy that he wants to reduce the size of the Federal Reserve's balance sheet. So that would mean selling off a lot of longer dated treasuries that the Federal Reserve have on its balance sheet, which would also put upward pressure on them. But it's unclear how much of that he's actually going to be doing, so that's more speculative. And lastly, we do expect very good GDP growth, not surprising after all the stimulus I just talked to you about in 2026, right? We have the AI stimulus, we have the fiscal stimulus. Monetary interest rates, if anything, are a bit low, so we do expect 2026 to be a strong year, up near approaching 3%. But then after that, it's going to moderate a bit in 2027, right? We have the cuts coming into Medicaid and SNAP. We have these AI investment expenditures that are going to have to moderate just because they don't have more runway to leeway to increase their expenditures. But that being said, this moderation is moderate, right? Growth in 2 to 2.5% in 2027 and 2028 is still very strong productivity growth rate, right? And that's a strong growth rate in GDP. And that's because we have this robust elevated rate of GDP productivity growth. And to wrap up, we give you a point forecast about where we're going, but the uncertainty right now are very large, right? We do have the standard uncertainties from these tariff and deportation policies that remain in flux. We have a lot of fragilities in the financial market that potentially there could be an AI bubble that pops. Potentially, there now could be a run on private credit markets. Potentially, there are potentially issues in the plumbing of the treasury market because of the constrained balance sheets for primary dealers, as well as these more price-sensitive hedge fund investors that make up a lot of demand for treasuries now. We have artificial intelligence, which might lead to, disruptions of the labor market going forward, although we're a bit more, we don't think that's a hair on fire alarm yet. And then large, the biggest concern right now is the war in Iran. So if you go back to last June when we bombed Iran there, oil prices jumped $10 immediately, but then very quickly, petered out and went back to where they were before. So it's already a more extreme scenario where we are now, right? Oil prices have gone up already about $20 this year, but we could still have a scenario where this war gets wrapped up relatively quickly and oil markets return, right? We could also have a scenario where we're dragged down this war for months and months and much longer, and Iran is able to close down the Strait of Hormuz. It is effectively closed right now. And in that case, the 85, we've seen a $20 increase this year, a $10 increase over the last couple of days. Oil prices are about $85 a barrel right now. That could easily jump to $100 if this gets full, right? And so then you might see price effects of like what we saw in 2022 when Russia invaded Ukraine, right? So this could be a very large inflationary shock if it got very, very bad. But at this point, who knows? Okay. But to wrap that up, that's all I have for you guys. Thank you.
Okay, so now turning to California, and Sebastian talked about he came out here in 1981 and was here for the 1984 Olympics. I also came out from the frozen Midwest, not to UCLA, but to USC across town about the same time. But I didn't stay for the Olympics. Faced with Carmageddon, I left town. And a little later, William is going to talk about this and about netting out the fact that I didn't spend money in LA while visitors for the Olympics did, and trying to get a handle on how that affects the LA economy and the California economy. And we built that into our forecast for 2028. But I start you off with a cover of a Vonnegut book called Player Piano. And if you haven't read this, it's a good read. It's a short read. It's about a society where technological advances are so rapid that there's a shrinking number of people who are producing all the goods and services, and a growing number of people who don't have jobs. And Clement talked about this with happening in the US. California is kind of leading the nation again in this with income growth, superior income growth, but not job growth. So we want to talk about that and what's going to happen in the future, and do we see signs that that's going to turn around. So our roadmap for today, that GDP employment divergence, that's the first thing we'll talk about, and then the sectors that inform the forecast, and then we'll follow with the California outlook. And so just to begin, so the data here is on the right-hand side. The graph that you see is GDP by quarter 2024 through the third quarter of 2025. We don't have data on GDP since then by state. We do for the nation. And that's kind of a problem in having contemporaneous views of what's happening with production in the state. But if you look at this, the yellow bar is California, the blue is the US. And with one exception, over these 7 quarters, California grew faster than the US, right? You see one there where there isn't a yellow bar. That's because the US declined that quarter and California did not. It was 0. So still growing faster than the US. And then there's one quarter where the US did grow faster than California. So we have superior growth, but California has the highest unemployment rate in the nation when you go state by state. And it's 1.1 percentage points higher than the US in December, which is the last month that we have employment data for the state. And so there's that divergence, growing faster than the US, but a very high unemployment rate. And I just spoke a moment ago about We don't have more contemporaneous data. So here at the forecast, we've developed a monthly GDP number using employment and productivity. And so I want to show you that. The blue dots here are the official quarterly GDP numbers for California. And the orange line is our new monthly series. And if you look at this, where the blue dots run out and you're on the orange line, it's still growing. In fact, at 3.8%. Now, we have a benchmark revision coming up in a few weeks, and that's expected to lower the measured employment in the state. That's going to bring that 3.8% down, but it's still not going to bring it down to below the US 1.4%. So still in the last quarter that we have data on for the US and California, California is growing faster than the US. And so let's look at employment and try and get a handle on what's happening with employment. Why do we have this high unemployment rate? And why haven't we seen job growth? So we have two measures of employment. The top line, the blue line, comes from a survey of households. It's actually a fairly small survey. It's 5,500 households. And it measures people who are employed. And so it includes gig workers, part-time workers. It includes consultants, 1099s, people who work in family businesses, family members working in family businesses. So a whole lot of people who don't have payroll jobs. But the payroll survey is a survey of enterprises. And of course, enterprises have to report their payrolls for tax purposes. And so that's a much larger and much more accurate survey. And that's the red line. And if you look at the red line, it looks kind of flat. It's actually not flat. For some time, we've been forecasting that for the year 2025, California would lose payroll jobs. And we were right on the money with a loss in 2025 of 11,200 payroll jobs. So that's kind of the employment situation. And we have deportations coming up, or immigration policy. Oh, I'm going to get to that in a moment. But that's certainly going to affect what's happening in California. So I want to show you the risk of that in a moment. But before we get there, I want to go sector by sector, see what's happened in the last 3 months. So this is kind of important because for the whole year, California lost jobs. But more recently, we've seen some change. Now, Clemens said that, in the US, this is all dominated by healthcare and social services in terms of job gains. And the last time I showed you this graph, that was about all that was there in the blue for job gains. In the last 3 months of 2025, it's still healthcare and social services all the way over on the right. And then we have a number of other sectors that have started to grow. So I want to annotate this with the policy risks. And so we start with healthcare and social services, and both deportations and budgets are going to affect that sector. So the loss of healthcare insurance subsidies, deportations particularly affecting home healthcare and nursing homes. So this is a sector that doesn't have legs going forward. Farm is going to be affected by immigration policy, but surprisingly, we're seeing an increase in payroll employment in farms. So there are a whole bunch of reasons why this is kind of a volatile sector, but we did see an increase in the last 3 months. State and local government, that's going to be affected by budgets. And we know just here in Los Angeles, we're going to have layoffs and hiring freezes. That's true through most of the communities in California. So that doesn't have legs, but it did have some job growth there. This is logistics. Should have been affected by tariffs, but if you look at the goods that are coming through the ports of Los Angeles and Long Beach, they're up except for during the pandemic, when we were all on our computers, supposedly on Zoom meetings, but really on Amazon buying goods. If you take that out, you guys weren't, but I was. If you take that out, then we're at record levels of goods coming through our ports, even though we have these tariffs. Part of the reason is that some of the things that we buy and that we need, and that we're going to buy almost regardless of the price, so they're price insensitive, like light bulbs, we're going to buy from China. That's the only place you can get them. right? So those goods are continue to come in spite of the tariffs. You also see in the cargo movements through the domestic cargo movement through our airports, you see that that's at either flat or growing levels. So that combined with the fact that income growth means more goods purchases anyway, which means more online goods purchases. We now have moved our forecast for the logistics sector, transportation and warehousing, from flat to slightly positive going forward. Next, we have leisure and hospitality that's going to be affected by immigration policy, wholesale trade tariffs, and we'll go a little quickly here. Other services by immigration policy, non-durable goods, immigration policy, and tariffs. Retail trade, where we've got actual job losses in the last 3 months of data. Not information, construction, and we're going to talk more about construction with tariffs and immigration policy. Federal government, of course, budgets and education. The last time we were together, education was a growth sector in terms of the number of jobs that were added. Now it's turned, as we forecast, to negative. Negative because we have declining school enrollments and with immigration policy, that's going to accelerate. And we also have budget concern. And school districts like LAUSD and Oakland USD are actually shedding employees. So if we're going to grow, aside from that, growth in logistics that we talked about, it's got to be in durable goods and tech. That's what you have to have to really push the California economy. And one thing that Sebastian alluded to was Hollywood. Hollywood has been a drag on the California economy as Hollywood or the production of entertainment has restructured because there was just too much content being produced. I'm going to show you a graph of that, and that has stabilized, and we think that's going to turn around. But let's go to deportations, because that was sort of in many of those sectors that I showed you. So this graph here I've shown before, this is the exposure by state of the top 5 states that are exposed to deportations. And the blue blocks here are undocumented. The percentage of population that is undocumented, that's an estimate, of course. And then the orange adds to that temporary protected status. And the reason for adding that is the administration has said that they're going to remove temporary protective status for Venezuelans, for Haitians, and for Nepalese. And if you look here, the orange is not much higher for California, but it really impacts states like Florida. Nevertheless, California, not the most exposed, Texas is, but it is certainly heavily exposed. And in studies that we've reported on previously, those studies of past mass deportations have shown that native-born unemployment goes up in communities that are affected heavily by deportation. So we did a study through August, and we reported on 3 months ago as to how that's affected county by county in California. And what we found then, and we've updated the study and it shows the same results, updated the study through December, is that about a 1% increase in foreign-born increased in the county relative to California, 0.1 percentage point. So not much, and that's small enough that it doesn't carry much statistical significance. So what we conclude is that while past studies have shown that the complementarity of work gives you higher unemployment in those communities, it hasn't really happened in California yet. So what is that complementarity? Maybe an example would be good at this point. Think about a builder who's building homes. And let's say 2/3 of the builder's drywall workforce is undocumented. So they're either detained or they're not coming to work for fear of being detained. So now you have to slow down putting up drywall. That means you have to slow down the building of homes, right? Because you have to complete those homes, which means that native-born, let's say electricians or HVAC or whatever, you're not going to need as many because you're not going to be building homes at the same rate. That's the increase in unemployment. But fortunately, we haven't seen that thus far in California. Possibly in 2026, but it just doesn't seem to be robust so far. Okay, so turning to regional job growth, and this is another kind of hint at optimism. The little red there that you see on the right-hand side, that's US over the last 3 months. But look, most parts of California have been growing faster than the US in terms of employment. That's a real shift. That's except the East Bay. And then the one all the way over on the right is what's called the Great State of Jefferson. Those are those counties up north that have been losing population. So it doesn't really amount to much in the aggregate. But importantly here, as you move from the left kind of to the middle, you get San Diego, Silicon Valley, San Francisco growing again. And so that gives us some hope. And we're going to look at that momentarily when we get to tech. But first, I want to talk about manufacturing. And because manufacturing, particularly durable goods manufacturing, needs to grow for California to grow through our forecast horizon. The black here is non-durable goods. Already talked about non-durable goods does not seem to be a real growth area. That's food processing. That's California's wine industry, which those aren't expected to grow. But the first blue, light blue, there is transportation equipment. That is all in the cutback in electric vehicles. What is, if you just aggregate this, what you find is in aerospace, so in space, in commercial transports, in military transportation goods, that's all positive and there's hiring happening. That's really good news for Southern California, particularly Los Angeles, that we're seeing positive hiring and we're expecting that to grow. And we've been kind of waiting for that to take hold. And then we get navigational equipment, and that's going to be part of that transportation equipment. So that's going to turn around, and semiconductors. And there are several factories in California that will be opening up in Roseville or Temecula that are going to be producing semiconductors. So we're expecting durable goods, not in the next 6 months, but thereafter to really start growing in employment and start driving growth in California, both in employment and in income. But keep in mind that we're down 2.3%, 2.3% over the year in manufacturing employment. So a little bit of ways to go to kind of crawl out of that and start having an increase in manufacturing employment over 2024. Turning now to tech, and you saw, that tech has been losing jobs. We have these announcements of tech firms shedding more and more jobs, but something has really kind of changed here. So this is breaking that down. Data processing, software, publishing, web portals and archives, data storage, all negative in terms of job growth. So job losses, but we're seeing job gains in consulting, particularly IT consulting, in scientific research and systems design. And this is where you're seeing an increase in employment in San Francisco and Silicon Valley. And that is really the shift in that sector to AI and developments in AI and robotics technology. So here we are, again, expecting growth. We're expecting that to continue to dominate. And just to give you an illustration of that, this is from KPMG, their Venture Pulse, fourth quarter of 2025. And they report on a number of things. But one of the things they do is put out this table that you see, which are the top investments in venture capital in the Americas. So it's all of the Americas. And just look at this. San Francisco going top to bottom. San Francisco, San Francisco, San Francisco. Number 5 is New York. Number 6 is New York. Number 7 is Silicon Valley. And in the aggregate, where we have numbers for the entire state, California is getting around 70% of all venture capital investment in the U.S., in the Americas. So the money is coming here. We see the results in hiring now, and we expect that to continue. Turning now to Hollywood, and Sebastian said it was an optimistic forecast, mildly optimistic. But importantly, it's mildly optimistic, and it's not negative. So what you see in the graph on the left-hand side is a bump up in employment in film, TV, and streaming. And this is kind of the rush to produce content for streaming. And there's too much content being produced. I think, as you know, you turn on your television and it's just filled with all kinds of shows you can watch, so much that I don't know about you, but I look at it and go, I can't make a decision and turn it off. And Hollywood realized that and realized that that's not a sustainable business model and started restructuring. They started restructuring before the twin strike. And you see that with a sharp drop. And usually after strikes, you come right back to where you were. You see it comes back a little bit and then it's been flat. And you can see that in the graphic that's on the right-hand side. This is from Film LA of days of filming in Los Angeles by quarter. The black is 2024. The blue-green is 2025, fewer days of filming. But the state legislature passed a subsidy bill and the governor signed it, and that has yet to take effect. So we're expecting growth in the sector. It's not going to go back to the heyday of streaming, but growth in this sector. This sector produced about just under half of that differential in the unemployment rate between the US and California. So it's no longer a drag on the California economy. It's in fact a positive. And so that's some good news. Now, not everybody who was in that sector are going to be reemployed in that sector because it's not going to come back to where it was. And it takes time for those folks to move into other sectors to get different kinds of jobs. And that gives you a persistence of that unemployment. But, this strongly suggests we're going to move away from that big differential. Okay, turning to housing. On the left-hand side, you see existing single-family home sales, and it's down at depression levels and it's staying there. You see a little bit of a bump up because mortgage interest rates, including jumbo mortgage interest rates, have come down. And there's more inventory on the market. Not a lot more inventory on the market in California compared to the US, where you do have a lot more inventory on the market, particularly places like Phoenix and Austin. But there's more inventory on the market, and you look on the right-hand side, and home prices are not going up, but they're not really going down. It's kind of a soft market, and they're at very high levels. So we have limited inventory, high prices, a diminished total housing stock because we lost some 16,000 more or less homes in the wildfires of December and January of 24 and 25. And that should lead to a building boom in the state, right? But if you look at the new residential permits and kind of move your eyes from the left to the right, you don't see that building boom. And just like the US, home building in California seems to be frozen. So why is that? Uncertain cost. Builders don't know the cost of materials because they don't know what the tariff policy is ultimately going to be as they build a house over a year's period of time. We still have high interest rates, but construction loan interest rates are much higher than mortgage rates. And they're in the 9 to 10% range. And so that increases the carrying cost for builders. Labor shortages due to immigration policy, so they don't know what labor is going to cost, and they don't know what they're going to be able to sell their house, the houses that they build for, because housing markets look a bit soft right now, and our price is going to go down. So this is another risk, and so they're holding off. They're staying on the sidelines for the most part. So that brings us to our forecast for unemployment. The things that have been carrying us through 2025 are going to still be there in 2026, and it's going to result in a little bump up in the unemployment rate. This is less of a bump up than we had 3 months ago to 5.7% average. And then we start to get a decline as these factors in these sectors that we've talked about start to take hold. And by the end of the forecast, 4.4% unemployment. So to summarize, 2026, manufacturing tech drive California growth, mostly in the second half of the year. Finance, agriculture, construction, leisure, and hospitality, big question mark there. But in 27 and 28, we return to superior growth. We've got the technology growth that Clement was talking about nationally, and we've got the stimulus really coming to the fore in manufacturing, tech, construction, and tourism. But we still have risks to the forecast. Size and timing, these are just the same risks as Clement talked about. I thought that he was going to talk about the fact that the president has said he's going to release these UFO files. Maybe that's a risk. I don't know. But the other risks are ones that we know, including the ongoing war in Iran. And so a few numbers, very little net job growth this year, 0.5%, but then 1.6 and 1.9 going forward. The unemployment rate coming down to 4.4%. And housing, we don't have much increase in terms of the number of units on a percentage basis because we're starting from a very low level. We have a lot of increase in home building, but we only get up to 125,000 units by 2028. Not enough to make a dent in affordability. And that brings us to the end of the California forecast. Thank you. So I think now we have about 10 minutes for questions from our in-person audience. So unless we've answered all of your questions, do you have any? Yes, right here. And these are questions on the national as well as state. So if you have national questions, Clement's here to answer them. Go ahead.
Okay, thanks. I noticed on one of your last slides, you said it showed that tourism was going to come back in 27 or 28. On the last slides over there, I think it showed tourism coming back.
And the rest of the program is going to talk about some of the events that we have that's going to bring tourism in. So yeah, exactly. And importantly, but this is kind of a bit of a risk in terms of international tourism. But we do expect that which has been depressed to start coming back with these events, the World Cup and the Olympics. Okay, other questions? We have a question over here.
Good morning. On your slide regarding regional job gains in the different geographical areas of California, do you have that broken down by sector?
It is somewhat broken down by sector, but the short answer is no. What I did look into was why did Silicon Valley and San Francisco exhibit job gains? And part of that is that slide that I showed you on job gains in AI and computer design and systems design.
The Central San Joaquin Valley.
So you remember I showed you gain in farm employment, right? And so that's a big part of the Central Valley's economy. I think it's related to that, but I haven't done kind of a lot. But in Kern County, you have real growth in the logistics industry. I don't know if any of you driven north on the 5. When you come down off the Grapevine, there's huge warehouses now in southern Kern County. And so the logistics industry is kind of expanding there and in San Joaquin County in the north. So you've got a number of factors, but I don't have a definitive answer for them.
And to add on that, note that there was in percentage terms. So the San Joaquin Valley is much smaller in population than say San Francisco or the likes, right? So when you have some job gains there and substantial ones, they become much larger in percentage terms than the job group gets.
Jerry, I used to ask you questions at USC, and 40 years later, I'm asking you this year. So,
So when I was on the faculty at USC, Ellie was one of my students.
one thing that you guys didn't talk about was the direct foreign investment overall in the US and in California.
So at a national level, the amount of foreign direct investment we're going to get in is still very speculative. So I agree with you, there's been very large announcements. Some of those announcements have been made based off of trade deals that is unclear whether they still hold, because those trade deals were made under the tariffs of IEEPA, right? And those tariffs are no longer the law. And on top of that, you have that say that, FDI claims that were made back in the first Trump administration. A lot of those also never came to be, right? A third factor actually is many of the claims that have been announced for this year and coming years are so large. For instance, the energy demand, the amount of energy imports that Europe has promised to purchase from the US are so large relative to the total amount of energy imports that Europe imports generally, that it's basically infeasible to happen. So there's just a lot of uncertainty related to how much of this FDI is actually going to be. Now, I do think it is a positive. Certainly, we do have foreign direct investment coming in, right? But the overall magnitude, it's hard to see how much of it is actually going to be, a large part of stimulus in the economy, or just sort of a.
And to add to that, these announcements about building factories and building very large factories, they have phases to them, and those numbers are going to be spread out over a fairly long period of time. So you build a factory, it's going to be 4 years, maybe 5 years. If you're going to build a sequence of factories, as TSMC has said they're going to do in Phoenix, you're looking at 10 years and 12 years. So they announce a big number, but the annual number, hard to say what it is, but it's going to be much smaller. Okay, so we have some questions over here. Oh, okay.
A multi-part question around manufacturing. It seemed that manufacturing is strong, but with IEEPA, with OBBA, what do you think the outlook is, and how is it coming back between just the reinvestment in manufacturing in California with the labor issues? What do you see that's driving that? And how is that going to come back with the labor force and again tariffs and taxes and just technology and AI? And how do you see manufacturing taking hold and growing?
Okay, so a perfect example was in today's newspaper from El Segundo. The factory that used to produce Hot Wheels and Barbie dolls, which are produced abroad, which is not coming back, has just been leased to a company that produces crystals for pharmaceuticals in space. So they're doing that kind of manufacturing there. They'll use many fewer people. It's high-tech manufacturing. You need scientists and engineers right there. But that's the kind of manufacturing that's growing in California. So it's not going to be the way it was. Back in the 80s and 90s, we're not going to be doing metal bending and riveting. But that's the kind of manufacturing we see happening in California. And there are factories actually being built all over California doing that. So, that's the kind of transformation we have that's going to grow manufacturing output. It's going to grow manufacturing employment, but we're not going to get back to the kind of manufacturing employment we previously had.
Thank you for your presentation. Appreciate it. What's your outlook on the federal debt? And is it going to get to a level, or do you see it getting to a level where it will not be able to be sustained by GDP growth? And where do you see Social Security going in the future? Do you see it shifting to like a means tested model for retirees?
So I'm not going to speculate on the solution to the, funding Social Security in 5 years' time. That's not my expertise, but certainly something needs to be done. On the federal debt level, I want to be a little bit careful of the term sustainable because it's unclear what sustainable means. I mean, right now we have a large US debt and it's functioning just fine. There's a lot of demand for the US debt out there, despite what some people claim. But that being said, you asked whether GDP growth can sustain it. And right now, GDP growth is not sustaining US debt in the sense that GDP growth does not grow fast enough to keep the overall level of debt relative to the size of GDP the same size right now. Like the trajectory of US debt right now is to continue to rise. It's around 100% right now. It's going to reach 120%, 130% in the 2030s. It's going to be 150% in 2050. So there is a real issue there. We need, change in tax and spending policies on both sides to create a better balance for the debt. So right now, I mean, in that sense, the federal debt trajectory is not sustainable if we don't touch and don't do anything, right? However, we do certainly expect that at some point, something will have to change. We will get policies. Because otherwise, then we'll probably have some sort of reckoning in the treasury market or what have you. But that type of, what triggers that is very hard to judge.
Okay, we have time for one more question.
This is Chris for Jerry. In your forecast for California, did you factor in the United States-Mexico-Canadian agreement that's coming up in July?
Factored in the sense that it's assumed what we have today remains. We have no way of knowing what those negotiations are going to turn out to be in terms of changes. The three economies are so closely linked that I think markets are going to force something that is maybe not too different than what we have today, but that's pure speculation. So we've assumed no change. Okay, and I think we are just about out of time, so I'd like to turn it back over to Sebastian. Okay, thank you, and turn the program back over to Sebastian.
Okay, well, we're having a break now. Mr. Caruso has just arrived. He's going to be mic'd up and we're going to start our conversation. We are going to have time at the end for a couple questions from you guys, and we're very much looking to that. So Rick, if you can, it's your pick. Which seat do you want?
Either one.
You go on my right then. You're okay.
All right, all right. Good morning, everyone.
Okay. So,
To your right, is that symbolic about something or
well, I didn't know what to say. If I said you are to my left,
is this USC? Oh, I know. I just had to say that. Come on. Oh my God, Jackie Levy is here and Greg Rosa from The Office. Wow. I got to turn my chair this way because I don't trust them. They'll shoot something at him.
okay. So, Rick, thanks for being here with us. I was going to start with a conversation about the state of California, but now that you mentioned USC, I'm going to ask you upfront the question I had reserved for the end, which I asked you when we had one conversation the other day. So how would you react if one of your grandkids decides to come to UCLA rather than USC?
Well, I mean, honestly, after the DNA testing was cleared up, listen, I am a big fan of UCLA. So I think it would be great if they came to UCLA. And obviously, if he couldn't get into USC, he should come to UCLA.
I was told, Sebastian, Rick is really fast, so don't let your guard down. So we're getting a little of that. So let's just plunge into our conversation. I want to start with demographics, if you don't mind. California is losing people. It's, this is gonna be the second year, after many, many years where population is gonna go down. I think that we are projecting about, 250,000 people leaving. And we are projected to lose 4 to 5 seats in, the House, by when the new, numbers are decided in 2030. So how do you see that? And is there a way of what could we do to reverse that?
Well, people are leaving, and I think when you take a look at the demographics and dig down into who's leaving, it's even more problematic. It's who's leaving. We've got highly educated, skilled people, the ability to have higher wages, earners that are leaving the state. And the problem that we've got in the state is that the state leadership, in my opinion, along with our local leadership, many of them have forgotten who they serve. And California has become increasingly so expensive to live here, to buy a home, to live, to commute, gas, all of these kind of things. And on top of it, and certainly the city of Los Angeles is the same way. In Los Angeles, this last year was the lowest amount of housing starts or apartment starts in the last 10 years because it's overregulated and too expensive to build here. So capital goes where capital knows that it can get a return and be safe. And I joke with people, but it's not a joke. You know, go around the city of Los Angeles and find a crane in the air. They're non-existent because people aren't building in LA. Now they're building in neighboring cities, Culver City, Glendale, Burbank, and doing very well, Newport Beach. So what we've got to do is realign our priorities. We have to bring down the cost of living, and it can happen. It's not that complicated. We have to build more housing so that people that are have worked hard, have an education, they have an expectation that they should be able to buy a home. They should be able to buy a home and not have to drive 2 hours to get to work or they can buy a home. And we just need to start realigning our priorities. The other last thing I would tell you is this tax that's going through, the asset tax, the billionaire tax. It may sound good, but there is already about $1 trillion based on JP Morgan's estimate that has left California, which will have a huge impact on the revenue coming into California. And if it gets on the ballot in July, I would imagine you're going to see even more and more people leaving. And it's not just the billionaires leaving. What everybody recognizes is the minute that door opens and you start taxing assets, it will start going into different tiers. So I think it's a terrible, terrible proposal. I think we should pay our taxes. And if California is more expensive from an income tax standpoint, so be it. But we should also get our money's worth living in the state. And I'll close with saying, over the last 6 years, the budget of California has gone up 75%. Is your quality of life 75% better? So if in your own businesses, in your own world, can you imagine if your budget goes up 75% and you have nothing to show for it? Probably less to show.
Yeah. So let me, Denmark just got rid of its wealth tax because it was not collecting.
Hasn't worked anywhere.
Anywhere. So there's lots of literature. There's OECD, the Paris-based think tank that has done a lot of work on the subject. But let me go back to which I agree with your view that especially in Los Angeles, we need more housing, and that neighboring cities like Culver City is doing well. Run me down what is actually needed. So let me see. I'm very visual. So I'm looking in my mind the area on it's either Pico or Olympic around the West Side Pavilion, the old West Side Pavilion, which is now going to be a UCLA building. Right? And I look at that and I drive west towards the beach. And there are all these little businesses, like 1 story, and there's no high rises, and it's close to public transportation. How do you envisage that? Would we get rid of those businesses and high rises? How could that happen?
Well, we already have laws in place, and I'm a big believer. Los Angeles generally is a single family neighborhood city. And I think we should protect that. I don't see building high rises, a lot of density in suburban sort of areas. Where I do believe, in which we have laws that provide it, is we've got transit zones that allow more density and height. And we should be doing that. And we should be encouraging that. But you can encourage it all you want with the laws. As a company, and we're one of the largest real estate companies based in Los Angeles. We made a decision almost 7 years ago not to build. Almost 7 years ago not to build anymore in the city of Los Angeles. The last project we built was the village up at Palisades. And the reason was not that we didn't love Los Angeles. Too overregulated, too expensive, and too unpredictable. Too many layers of decision-making to even know when you're going to be able to get a project through. And so why are we going to go do that? At the same time, we could be building in Glendale that is balanced, supportive. It's a clean city, clean streets, good police department, et cetera, pro-business, and maintains beautiful neighborhoods. Or do the same thing in Culver City or Montecito. We just broke ground out at Calabasas, expanding our existing project out there. We're adding, what are we investing, Jackie? Another 140 million or so in Calabasas. Now, I wouldn't put that $140 million into LA right now.
So what would it take for you to build again in LA?
Have a business-friendly attitude. I don't expect to have the city say, whatever you want, you get. That's just not the reality is. I want a city to say, here's the process. We're going to take you through the process. You're going to know how it's going to go. And if you build a project that's reasonable and good for the neighborhood and gets support from the community, we'll support you.
So predictability.
Predictability, but also
Commitment.
cost, because time is cost. And if it takes you years to get through an entitlement process, your holding cost kills you. And so
So
it
let's
just adds, and it's so, it's so overregulated in LA. So overregulated. And so you got to strip away unnecessary regulations. And I tell you what, a lot of cities have done. You've got art fees, transit fees, park fees. They stripped all of those fees out because what was happening, the city of San Jose, for example, what was happening is they were approving projects, but they were so costly to get built, they never got built. Then they start stripping away all the fees to reduce the cost. And all of a sudden they got a housing boom in San Jose.
So let's move from the city of LA and neighboring cities to the state. One issue that has given a lot of headaches and generated complaints among neighbors is ED1. What's your view on that?
I'm not good on.
Okay, so that's the percentage of each city of affordable housing, low income housing that has, and the issue is that there are pockets that have been exempted. And so where do you, so the state passed legislation that says that X%, I forget what X is, every city has up to X% of low income housing. Yeah.
I just didn't know the name of it. I'm not a big fan of government mandates to build. I'm a big fan of having the government provide incentives to build. And I just don't think mandates work. And they especially don't work when they're not affordable to build. But I could tell you, we just got permitted a workforce housing project in Montecito. It sounds like a misnomer, right?
It does.
But we wanted to have at our resort, if you know our resort up there at the Rosewood Miramar Beach, we wanted to have our entry-level employees being able to live and work within walking distance. And so we're not doing it with federal tax credits, state tax credits, none of that. We're financing it ourselves because what we were finding is our employees were driving a couple hours to get to work and a couple hours to get home. It's unsustainable. And even with that great objective, it took us 2.5 years to get it permitted. Even with the state mandate, it took us 2.5 years because the state wants more low-income housing. And so I think the biggest hurdle we have in California is honestly, we have to start electing people that are competent and qualified and understand priorities. And we,
So-
just my political view, people in the middle right, middle left, I don't care what flavor you are, but people in the middle that can work together and actually know how to get things moving.
You have made what you just said, Rick, makes it impossible for me not to ask you the following question. Why aren't you running? Lots of people had hopes that you were going to run. I've seen press conferences and so on that where you, but why aren't you running? The reaction that you just generated.
Well, that wasn't for me. That was just because we want people in the middle that can actually get something done. But
Are you in the middle, Rick?
I am. I'm very much in the middle. I am a radical centrist. I've been that way. I've been that way my whole life. And I really loved when I ran for mayor 3 years ago. I loved it. And I had a great experience. It was a great experience up until the very end. That wasn't such a great experience. We actually thought we had won and then we didn't win. So it was a little bit of a roller coaster. And there was a lot of concern and talk about the safety of the family. I've got 4 kids. They're older, 36 to 26. They're the most important things in our lives, like all of you with your family. And my wife is a very private lady, but she was all gung ho for it. And we did a lot of things 3 years ago from a safety standpoint for the kids. I just didn't want to make sure they were safe. I spent the last year and a half going up and down the state, and I was really excited about running for governor. And I felt we had a really good path to do it. And then as he came down to the end of this thing, what really started weighing heavily on me was the safety of the family. In the last 3.5 years, the level and the tone of anger in political conversation has just gotten to a point that it worried me that somehow attacking somebody, being mean to somebody, being violent with somebody in the eyes of politics was tolerated. And we've got people to the far left and we got people to the far right that I wish would all get on Noah's Ark and go away somewhere. And and I just didn't want to subject the family. I'll be protected. I'll be fine. But even with a security detail, even with things like that you put on people, I just didn't want to take that chance. What I'm hoping is I would love to serve. Now I served the city of Los Angeles for 17 years. I worked for 3 mayors, Tom Bradley, Dick Rudin, and Jim Hahn. I love public service. I would love to be in elected office. But now just didn't feel like the right time to do it. And so if there's an opportunity in the future, maybe we'll see. But now my dedication is on the private sector side, doing everything I can to help move that needle to the middle and electing good, moderate people and moving policy more to the middle.
Thank you. I think it's very important you said now is not the right time, maybe in the future. So there is some hope there. They will come and look at your SAT, your SAT scores though, because
Oh, that would be horrifying.
yeah, not as bad as you know whom. Who got 940 or
Oh,
something.
yeah. Now I could taste that, I got this award at USC one year and it's called the Ace of Call Award. And I put up my transcripts as a joke. I don't know anybody in the audience that's around my age. Have you ever looked back at your college transcripts? Oh my God, were they scary?
Well, there was no grade inflation at the time. Now with grade inflation, so you should not compare it. So let me go back to something you said earlier, Rick. You said not only we should be worried about the people that a lot of people are leaving California, but also the kind of people that are leaving. Let's talk about migration and the working class people that we all know. So what's your take on what's going on? ICE and all of that. It's complicated, but we're very interested in listening to what you have to say.
Well, I've been very clear on my position with ICE. I do not agree with the way things are going. I have posted about that. I actually love posting about that because it really stirs up the far right. It's so fun to get them going. And it's really fun to get the far left going too. It's sort of easy to do it to trigger people. But listen, I am a big believer this is a country that was built on immigrants. I am a big believer that if someone is here, albeit illegal, came in, but has worked hard, does not have a criminal record, has built a family, whatever the case is contributing to the economy, contributing to the community. We have an obligation, I believe, as a country to give that person a path to citizenship and allow them to become a legal member. Now, I do also believe we should have closed borders and secure borders, and we should know who's coming through our borders. But I do not believe that it serves any purpose to have ICE raiding innocent people, people without a criminal record. There are enough illegal aliens in the United States with criminal records. Go after them. And I do believe the cities, whether you're turn this off, whether you're a sanctuary city or not, I do believe that we should be turning over illegal immigrants that are in our jails. I don't think we should be housing them. Send them back to the country where they're from. But we have to have more compassion. We have to have more of a balance. And economically, it will be devastating to many of the industries in California.
Yeah, so some of our friends here know I served in the Council for Economic Advisors for Arnold Schwarzenegger.
Mhm.
And at that time, the Kennedy-McCain Act was being discussed. It wasn't passed. And Arnold asked me to look at what would be the economic effect of having 50%, 60% number of undocumented workers deported. And as you say, we did the calculation. We had a model, things that we economists do, and it was devastating. So I think we have made a lot of progress. The borders are not secure, but we made no progress, Congress hasn't, in terms of the second part, which is what you mentioned, a path to citizenship. How would you, if they come, and I'm sure they do, and ask you, Rick, how should be the architecture of some legislation that would provide that? What would be the main sort of bullet points that you would suggest?
Well, Reagan had a good, he had a path to citizenship, and it was a good program. It was actually fairly direct. I think it was, no criminal record, 5 years of working. You had to get educated on the history of the United States, pass a test, all of these kind of things. And if you did, I think it was 4 or 5 or 6 different things, you were able to qualify to be a US citizen. And even if you want to make somebody like sort of temporary on probation for another 5 years, then go ahead and do that. But I think all of us have experience with people and with families that are really good, hardworking people that contribute back to our community that now live in fear that they're going to be picked up and shipped off. And I don't think that's right.
So I want to open for questions, but let me ask you on education. So again, the people who are leaving highly qualified, but our educational system in California is very strange in the sense that we have some of the best universities in the world, including USC. I will.
Oh boy, here we go.
Some of the best, at some point, California had, I don't know, 5 out of the top 20 in the world, right? Caltech, Berkeley, Stanford, and so on, right? USC, UCLA. But on the other hand, our K through 12, in particular, the high schools are very, very bad. And now we have the superintendent being in, allegedly, in legal trouble. How do we deal with this?
Well, we had California, what always drives me crazy is when I hear our elected officials, whether it's the governor or whoever, we're the 4th largest economy in the world, then act like it, which means you should have one of the best school systems in the world. And we don't. We have one of the worst in the United States. For all the money that we spend, more money per student than any other state, we have one of the worst school systems, K through 12. And again, it goes back to leadership. It goes back to decision-making. It goes back to priorities. And the other thing is we've got a city and a region that is just prone to corruption. And I talked about it when I ran for office. I mean, I joke about if you want to get, a quorum of the city council, you gotta go to the LA County Jail to make sure you got everybody there. We've had 4 city council people indicted, we had our city attorney was raided by the FBI, who was running against me for mayor. I mean, this is ridiculous. So I think that if you want to change, I said this last night to a group of people who were complaining about what's happening locally, then get off your butt and go vote. Because the biggest problem we have in this region, the amount of people that vote is so small. It maybe is about 20%. And you're allowing that 20% to dictate the direction of this region. And this next election is a consequential election. And again, I don't care if you're independent, moderate, Republican, whatever you want to be. Get out and vote and elect people that actually have experience. And I can say this now because I'm not a candidate. I know that there was a lot of reasons why people voted for Karen Bass. I get it. I lost. I get it. But everybody that voted for her got what they should have expected. She's never run anything. And to put her in charge of the second largest city in the country, you couldn't expect good things to happen. And we should think about that as we're electing somebody for governor who has actually had the experience of running a complex organization and has the skill set, the judgment, and the competency to do that.
What I suggest, Rick, we do for a couple of minutes is a rapid exchange. I tell you something and do. So the Iran war, say something about it. You may say I don't have an opinion on any of the things I'm going to tell you.
Yeah, my problem is I have too many opinions. I think it's generally the right thing to be doing because that regime for 45 years has killed so many innocent people. So I think you've got to do it, and probably it was the right opportunity to do it. And I don't know how you can allow a regime to be in power that one of their main goals is to destroy the state of Israel and destroy the United States.
Okay. All right, let's hold the applause. We're gonna
Now, a
give,
lot of applause.
we're gonna get a lot of applause at the end. So $38 trillion federal debt.
It's a problem. It's going to weigh the country down. You got to solve the debt problem. You got to go back to the days of Clinton. For those of you who remember, we got zero debt. If we could do it back under Clinton, we could do it today.
Artificial intelligence.
It's here. It's coming. Adopt it. Get smart on it. And I think it's going to be revolutionary in mostly good ways. They'll have risks, no doubt. We need to mitigate and be smart about, but it's a game changer. And it's going to change the world, change all of our lives.
Water availability in California.
I am a big believer. I ran Department of Water and Power for 13 years under Tom Bradley and then Dick Word. There is more than enough water in the state of California if properly used and moved around. And you've got to connect the Delta and allow that water to flow down for the ags portion of our state. California is the largest agricultural state in the nation. People don't realize that. And we've got a lot of water. We just don't know how to use it well.
Are politicians standing in between using the water well and the abundance that we have?
Well, they are because there's been such a fight over the Delta.
Right.
Right. And listen, we're along an ocean. I'm a big believer in desal. I'm a big believer in having tertiary treatment on our sewers. We don't use it. I'm a big believer in having double lines. Out in Glendale, our project there, we have a non-portable line that's used for all of our landscaping. We should do it. We actually collect up in the Palisades, all of our landscaping water. It goes into a tank, it's cleaned, and then it gets piped down to the city park. And there's just so many things that we could be doing. We didn't have to do that, but we did it. It was a good thing to be doing. It wasn't that expensive to do. So,
Okay, two more and then we'll ask.
Okay.
I don't know if you've been following Texas. If so, what do you think of James Talarico?
I haven't been, I saw it on the news last night. I don't know a thing.
Okay, so, people in the Democratic Party say that he's the new Bill Clinton, but anyway, we'll see.
Okay. I don't know. Well, okay.
Yeah, so I want
That would be like a funny joke.
well,
And
yeah,
I like Bill Clinton, but I mean,
he's a seminarian.
right now, he's not like in a good place in the news.
Well, if you,
I don't
if-
know if I want to be the new Bill Clinton right now.
well, if you listen to, if you, li-
Whoa, whoa, whoa.
if you listen to the exchange between Nancy Mace, Representative Nancy Mace, and Bill Clinton 2 days ago,
Yeah.
it's a little sad that what happened. But let me end by asking you about your philanthropy, and you've been so generous in so many fields, education. Now you have the Steadfast Foundation and so on. How do you decide? I mean, we have students here, and we are hoping that they will become very successful. They will become very, very wealthy, and we want them to know how someone who has made philanthropy a very center of his life, how do you make decisions? I was not born in this country. So one of the differences between working on the philanthropy field outside of the US is that you have to convince the wealthy to give their money. In this country, you have to convince them to give their money to you, because we have this tradition that wealthy people are very generous. So more than the decision of doing it, it's how do you decide who to give it to?
I think it's a very personal decision, and I don't think it's not only about giving money. I think what's really critically important is giving your time and giving your talent along with giving your money. And you need all of that. And I find it, and my wife Tina finds it so incredibly rewarding what we do. I couldn't imagine living a life without that. And I'm not a saint. It's just so fulfilling. And in raising our 4 kids, even when they were very, very young, they were very active and very involved in our charity. So one of our favorite, I'll just highlight one, because we focus on families that are at or below the poverty line with children, and we focus on education and healthcare. And so, great example, a school named Para Los Niños. If you don't know it, you should look into it. The school that we underwrite for the last 30 years is in the middle of Skid Row, in the worst gathering of humanity that's been allowed. And in the middle of this is the school that they start 6 months to 5 years old. And you open those doors and it's heaven. What has changed over the last 30 years, they go there for free. It used to be the working poor's kids. They were working in the sew shops in downtown or around Skid Row. Now, when we were down there this last Christmas for the annual Christmas party with the kids, the majority of these kids are living on the streets. Breaks your heart. Drive down there. Just drive down to Skid Row and see what has been allowed. And then look at this little school sitting in the middle of all, protecting these kids. You can't help but feel good. And so whether you can donate $10 and then go down there and work with the kids, or you can donate $10 million, to me, it's just one of the greatest, I think one of the greatest things you can do. And so we focus around youth that is at risk because of their poverty levels.
Wonderful, thank you. So we have time for 2 questions from the public. So maybe, do we have a mic back there, please? One.
You and I are the minority here, so I'm going to ask you a Trojan question. So the California climate and the climate in Israel is exactly the same. Temperature drops, desert, humidity, snow. Israel was negotiating back in 2008, bring fresh water from Turkey into Israel. Today, they're exporting water by having desal, gray water, and Sea of Galilee combination, all digitized. They're exporting water to Jordan right now. So problem solved. Why can't we do it in California? And if you were the governor, how would you do it? Because we have all the right circumstances.
No, you can do it. And what I tried to do when I was the president of Department of Water and Power was to actually build a desal plant along the coast that also, you know, a desal plant gets you 2 things. One, you get free water, but you're literally building a power plant and you're getting excess energy. So you get a 2-for for it. And, you know, California Coastal Commission and all of this kind of stuff, it was just, it's a battle that you can't you can't win. It takes, I think the desal plant in Carlsbad took 20 years to get permitted. And so again, this goes back to the leadership and setting the priorities. I am a believer that the California Coastal Commission should go away and the coasts should be controlled by the elected officials in that region that understand what the priorities of that region are, rather than 12 people who don't even know what that region needs. And so I think you have to fundamentally change the way the system works.
I like that. We have time for one more question. Hold on. We're trying to get gender balance here in the questions. Okay, this gentleman here.
Ms. Caruso, thanks very much for being here. My question is about demography and kind of the demographic trends we're seeing in the US. H-1B data shows that there are 350,000 applications this year, which is down from 700,000 a few years ago for only 85,000 spots. We have people who want to come to the US legally. Why are we not allowing that to be more prevalent or more talked about?
You know, it's a really great question because as you know, historically, one of the great things this country did was encourage immigration from those people who were already highly educated or who wanted to become highly educated. And it was one of the most frustrating things for me when I was the chair of USC is to be dealing with students that have worked their butts off. And then all of a sudden their student visas were expiring and had to go back to the country they came from. What we should be saying is, you got a great education, you worked hard, we want you to stay as a US citizen and be productive here. I mean, it literally in so many ways during World War II, that's the way the United States won the war from the technological standpoint, was the people that they were encouraging not only to come in, but to stay. And so you're right. And it's such a simple thing to do. It's a stroke of an executive order by the president to do that and encourage the best and the brightest to not only come here, but to stay here.
Okay, Rick, thank you so much for coming.
Thank you.
Okay.
Thanks for having me.
Good night.
Hello, everyone. Hello, everyone. We are all very excited that the World Cup is coming to Los Angeles this summer, and Super Bowl next year, and Olympics in 2028. So today, I would like to discuss the potential economic impact of this mega sports event on the local economy, with a special focus on the international tourism. So here, let's begin with this cost-benefit analysis of hosting the Olympics. So on the cost side, there are three major categories. The first one is organizing, operation. The second one is sports venue. The third one is general infrastructure, such as transportation investment. On the benefit side, the first one is the financial revenue, including ticket sales, sponsorship, and broadcasting right. So in addition, we have this short-term economic benefit, like increased tourism, local jobs, and incomes before and during the games. And beyond that, we have this long-term economic benefit. For example, infrastructure. Actually, the cost of Olympics, like infrastructure, could become a long-term benefit for the city long after the games. So one classic example is Barcelona. Barcelona used the 1992 Olympics as a catalyst to implement this large-scale urban renewal, reposition the city as a global tourism destination. So it is very successful example. So beyond that, we have this intangible benefit like civil pride and national prestiges. So the historical evidence suggests that usually Olympics had this tendency to overestimate the benefit and underestimate the cost. So if we just purely looking at this so-called financial cost and benefit, most Olympics end up in the financial deficit. So here I show you this Summer and Winter Olympics and World Cups benefit and cost in the financial side since 1960. So in this chart, the blue bar is the revenue, and the orange bar is the cost. So you can see these four financial, kind of smiley face. There are these four Olympics end up with financial surplus. And the Los Angeles 84 was the first one to enjoy this financial surplus. And the reason is because we are very cautious about the cost, because we learned the lesson from the very bad example in '76 Montreal Olympics, which has a huge, massive cost overrun. So we had 84 become a so-called financial legacy in the Olympics history. So right now, let's look at the recent Olympics. On left is Paris Olympics. The blue bar is revenue. The orange bar is the cost. So we can see for Paris, the venues and infrastructure actually are funded by public government. So if we remove that category, basically Paris Olympics in terms of finance is kind of break even, about $5 billion. On the right, this is project Los Angeles Olympics. So it's similar break even, about $7 billion. So did you notice that we don't have a budget on the venue and infrastructure? Because 2028 Los Angeles Olympics want to repeat this very good legacy in '84. We don't want to spend too much money on venue because we already had a very good existing one, like SoFi Stadium, Coliseum, or even UCLA. Yeah. So beyond that, so economic impact studies estimate this 28 Olympics probably will bring in 13 billion to 17 billion a benefit to the local economy. Yeah, that is under the assumption of, we call it economic multiplier. I don't know if you heard of that. That is kind of based on a lot of assumptions. So like Jerry said, 84, he left town. So actually that is the leakage of this economic benefit. So just think about that. In 28, if you plan to go to Olympic Games, but at the same time, you decide to save the money to cut the budget for your other spending you would have spent on local restaurant, then the multiplier will be smaller. So it is kind of really, we don't know the actual number will be eventually. So right now, let me give you the long history evidence of the economic impact for the Olympics. So this chart, let's look at the blue bar. Blue bar is the difference in personal income growth. You can think it's like local GDP growth between Los Angeles Metro and the United States. So if the blue bar is positive, that means Los Angeles is growing faster than national average. If blue bar is negative, it means Los Angeles is growing slower than the national average. And the orange bar is compared the Los Angeles and the similar metro like New York, right? Big and well diverse economy. So basically, sometimes you can see the whole long history. Sometimes Los Angeles is growing faster, sometimes it's growing slower. So if we just focus on 1984, when the Los Angeles Olympics took place, we didn't see the significant kind of plus. So basically, it doesn't really create a significant additional economic benefit. Let's look at Atlanta. So it's the same thing. So compared to Atlanta and the US GDP growth, the orange bar is the difference between Atlanta and Dallas, similar fast-growing metro. So in 1996, we do see some kind of positive difference. So that means Olympics under some kind of condition will bring in positive economic impact on the local economy. So right now, I would like to talk about this international tourism part, which is seen as a major benefit of hosting Olympics. So this is the data of monthly international tourist arrival in the United Kingdom. So let's look at the 2012, which is London Olympics. Actually, we see lower summer tourist arrival compared to a year ago or a year after. So what is going on? Why Olympics didn't bring in more tourists? And based on some kind of anecdotal evidence, we feel like there's a fear of overcrowding, congestion, higher price in the games. All right. So so some kind of regular tourists decide to postpone their trip to United Kingdom. So let's look at the Paris example. So Paris in 2024, we see the tourist international arrival, not international, this is just passenger traffic in July and August to the Paris airports. It increased by 2.8% compared to 2023. So not a lot of increase, but still some kind of positive impact. So again, we see many Olympic tourists coming to Paris, but some non-Olympic tourists probably stay away. However, we also find that for these kind of Olympic tourists, they are so-called price insensitive tourists, meaning that they are willing to pay the price to come here. All right, so that means hotel rooms rate and the revenue actually increased significantly. So in this chart, I show you the 24 Paris hotel industry performance. So the purple line is the occupation rate increased during the game by 20% from 60% to 80%. And the blue bar is the average room rate. And then another blue bar is like a revenue. So we see this dramatic increase from 400 euro to 800 euro during the game. And if we look at the year-over-year growth, we see the dramatic growth, like daily rate increase by 141%, revenue increase by 200%. So basically, our estimation is Olympics is estimated to bring in additional 1.1 billion euro for the Paris hotel market. Right. In addition, we know right now, in addition to hotel, we had a choice of short-term rental like Airbnb, and we also saw the same thing. The books rate increase, the room price increase. So our estimation is that it bring in about 200 plus million euro during the Paris Olympics. So we are seeing the same thing right now in Los Angeles for the upcoming World Cup. So basically, we see these Airbnb owners, they are very happy because they can just jack out the price for those price insensitive tourists. So I would say this kind of homeowner nearby the venue place where is one of the biggest beneficiary for Olympics. So right now, I would like to talk about another important factor usually overlooked for the Olympics, for the international tourists. So this is international tourist arrival in Brazil. So we can see in 2016, the Rio Olympic Games, the international tourists increased by 4%. That is modest increase, right? That's not bad. However, we also noticed that there's something interesting here. Why there was a huge surge of the international tourists from 98 to 2001 without any kind of Olympic Games. And the reason is this, just in case you don't know, the tourism is an export industry. So when the price of a destination country in terms of exchange rate, in terms of a product and service level in the domestic country is lower or higher, it plays a very important role to attract international tourists. So this is a so-called real exchange rate. So basically, you can think it's like a relative price level of the country compared to the rest of the world average. So real exchange rate in Brazil declined significantly because exchange rate dropped in 1999. So that could explain mostly of the reason of this international tourist surge at that period. All right, so here, let me give you an example of Japan, because Japan provides a very good long-term time series data. So we can learn a lot of things for these multiple factors impacting the international tourism. First of all, we can see these very long log linear trend. So that represent the continued economic and income growth in East Asia area. So right now, let's look at this. So Japan had a very successful Tokyo Olympics in '64. So we see the international tourists increase by 16%. They had even better successful event, which is the Osaka World Expo. So let's see the tourists increase by 40%. So here we see something interesting. There's a decline of tourism in '86. And the reason I believe is because in that year, Japanese yen appreciates significantly due to the famous Plaza Accord. So that means the international tourists going to Japan became very expensive. And we see the Great Recession decline. And then this natural big disaster, Fukushima earthquake, also reduced the tourism. So the most interesting thing is this. So because of this law scale, so in here, basically since 2013, we saw international tourists going to Japan increase by 4x. So that is just phenomenal. What is going on there? Yeah. So the reason is this. Real exchange rate in Japan, basically you can see this downward sloping trend since the mid 1990s. And even after 2020, we see the real exchange rate, the price of Japan even going further down compared to national average. So I remember 2 years ago when the Paris Olympics took place, I was traveling in Japan and I saw international tourists everywhere. Yeah. So, and if you heard somebody going there, you know the price, the hotel, whatever, everything is relatively cheap compared to the US standard. All right, so right now, so what is the takeaway coming back to the United States here? So if US had a very strong dollar, that means international tourists coming to the United States will be facing more expensive situation. So that will be a discouragement. And let's look at this chart. This is so-called real US dollar index. Basically, it's just like a real exchange rate. A lot of people don't know, actually, right now, US dollar is very strong compared to other currency. Maybe not compared to the gold, but it's very strong compared to other currency on this historical average. So last year, when we had this tariff uncertainty, you know, the US dollar declined by 10% depreciation, right? So a lot of Wall Street Journal people are very panicking. You know, actually, I know we should not panic because actually it's a relief for manufacturing sector, for this tourism sector, because dollar has been very strong over the past 10 years. So in fact, this depreciation of 10% last year helped boosting the international tourism to the United States. But anyway, this is the factor we cannot control. So we don't know what will happen in terms of the US dollars in 2 years. Right now, let's focus on Super Bowl, domestic tourism, and retail sales. So we know in 2022, we host Super Bowl in the city of Inglewood. So is any positive economic impact? So here I show you some evidence. So in this chart, this is the so-called taxable sales percentage change since 2019. And the blue line is California, and the red line is Inglewood. So basically, we can see they have some kind of very strong seasonality. So basically, we can see from 2021 first quarter to 2022 first quarter, which Super Bowl took place. Okay, yeah. And we can see California at that period, because of the COVID recovery, the taxable sales increased by 18%. However, Inglewood increased by 38%. And we check with other similar cities. So Inglewood really had a very strong taxable sales increase. So we can say the event like Super Bowl, just like Olympics, did bring in additional tourism willing to pay a higher price for the local economy. So that is good. All right, so conclusion, the Olympics attract price incentive visitor, pushing out the local price, while some regular tourists stay away due to overcrowding and higher price. exchange rate also play a very key role in the international tourism. The 2028 Los Angeles Olympics may or may not significantly increase the international visit number, but we believe the tourist revenue, for all the reasons we talk about, are very likely to rise, which will bring in some kind of benefit to the local economy. So following the 84 Los Angeles model, we aim to maintain the financial discipline and avoid overstaying the benefit and understaying the cost. So this is my presentation. So this is just my personal view and analysis as an armchair economist. So right now, we're going to turn to our closing keynote section, which we will have a phenomenal keynote speaker, which will bring in much closer, much more informative, real-world perspective on the Olympics. So I'm going to turn it to our director of the Center of Sports, Entertainment, and Media, Sanjay, and also our keynote speaker. Please join me and welcome.
Hey, Kathy, we're in the anchor position here. I've heard there's some events going on in LA for sports. You've had a really tremendous decade. College football championship, a Super Bowl in 22 that William just talked about. Around the corner now, we have the World Cup. Next year, we have the Super Bowl again, and then the Olympics. So can you take us kind of behind the scenes and tell us, I know you didn't pitch the Olympics, but for those other projects, how do you position LA and what's SoFi's role in helping that effort?
I'd be happy to. So hi, everybody. I'm sorry we're the end of the day, so I won't keep you too long before lunch, but I just want to make sure everybody understands that we have an incredible opportunity in Los Angeles ahead of us for this 26, 27, 28. No other city in the world has the lineup of events, high profile, major events coming to a city that we do. No other city in the world has ever hosted a Super Bowl, a World Cup, Olympic and Paralympic Games in 3 years, same city. The reason that's so important, an incredible opportunity, is all spotlight is on us. We are on the international stage. And how are we going to showcase and how are we going to show off our city and what's the story that we're going to tell? So going back to the answer to your question, it's very easy for us to sell Los Angeles and events want to come here. We have the best stadium in the world in SoFi Stadium. We have all these other incredible major venues that have been updated, Rose Bowl, the Coliseum, we have the Academy Museum. So we have the venues, we have the weather, we have the entertainment industry, we have the media attention. This is a great place to host events.
So let's start with the World Cup since it's right around the corner. That's a global event that even brings in more viewers than the Super Bowl. So how is putting on that sort of event different from an event like the Super Bowl? And how do you think about LA on the world stage?
Right. So we're 99 days away. Yesterday, we marked 100 days out from the World Cup, the opening match. So we're 99 days away from hosting the World Cup. In my experience over the last 20 plus years of running the LA Sports and Entertainment Commission, I've never seen an event like the World Cup. The Olympics is going to be huge. The Olympic and Paralympic Games is going to be huge because everything, or for 90% of the events, are happening in LA. But the World Cup is the world's largest single sport event, has the most attention. There's soccer fans from all over the world. So having the kind of attention that we have, good and bad, on us because we're hosting that is an incredible opportunity. But it's also gives a lot of responsibility because we're going to be bringing people in from all over the world. And how do we welcome the world? And how do we make sure that they have a good experience in our city? Because the whole reason we're doing this is not because we're soccer fans or not for the 8 matches that we're hosting at SoFi Stadium. The reason that we're spending this money, spending this time, spending this effort to bring World Cup to Los Angeles is for the opportunity it brings to our city, the economic impact, the community impact, which we can talk about a little bit later, and the media visibility. How do we use that media visibility to lift up our city?
So another feather in your cap for the World Cup is that we're going to be hosting the inaugural match. Right, so another big spotlight on LA. But when you're planning this and you have so many stakeholders, you have FIFA, you have the broadcast partners, you have LA and the city, there must have been some conflicts where you diverge from what our priorities are in LA versus what the partner priorities are. So can you give us an example of one of those, and how do you negotiate through that process?
Yeah, I think, well, first off, the challenge of hosting the World Cup from, I would say from FIFA's perspective, and I always say someday somebody's going to do a Harvard Business School case study or a UCLA case study on this,
UCLA
is
case
that FIFA is used to hosting the World Cup in one country or one place and having one decision maker. They have 16 host cities for this. This is a completely different model. And I don't think they were completely ready to deal with 16 mini countries. So I think the challenges that FIFA's had, number one, they're used to dealing in countries, Qatar, Russia, where they've hosted before, where it's an open checkbook. Those countries are using the event to, we're all using it to give media visibility, but they're using it for other reasons as well. And they spent a lot of money. I think FIFA was very surprised when they came, especially the 11 US host cities, that majority of them didn't have public funding to do this, that there wasn't an open checkbook of, hey, whatever you want, whatever you need, we'll just write the check and make sure this happens. And I won't speak for my other host cities, but a lot of the cities like Los Angeles, we have to raise the money privately to host these events.
So there's no public funds being.
There's no public funding to bring events to the city. For the first time in my whole experience of hosting these major events, the World Cup, we were successful in securing federal funding to help fund the safety and security aspect of it, but that's just one portion of the budget. So it's the first time ever. When we did the Super Bowl in 2022, 100% privately financed. I'll give you a comparison. In Texas, Houston and Dallas, they have a major events trust fund from their state. So when you bring a major event to Houston or to Dallas, you can apply for that, and up to 50% of the cost of hosting the events is covered by the state. That gives them an incredible advantage ahead of it to bring these events here. And the reason the state does cover that is because they realize that these events bring incredible economic impact. We don't have that advantage, so we have to privately fundraise. So back to your question, what are the challenges? Has been money. We don't have an open checkbook and we have to privately fundraise. So how are we going to do that and still deliver a great event?
UCLA is also challenged by money, I think.
I think they got like $100 million cash infusion yesterday.
That's true. So you clearly care about the city of Los Angeles. I think that's something that's different about your leadership style here with all of these events. And you've been very active with the Business Connect program, which is inclusive to small and medium-sized businesses. Can you tell us a little bit about that and how you choose these companies and how they meaningfully connect to these events?
Right. So I think it's something a little bit different. So our entity is a nonprofit. We are a 501c3. We are not doing this for profit. We're doing this for the benefit that it brings to the city. And we always talk about economic impact is great, but community impact is better. The ROI, the emotional ROI that you get from these events. And so one of the opportunities that comes from hosting these major events is opportunities for us to tee up our small and local diverse businesses to get an opportunity to bid on a contract to be a supplier around these events. Because if they do, I know it's a one-off, but that credibility, that seal of approval from the NFL really does help raise their profile, helps them get additional business. And so right before the Super Bowl in 2020, we created the LASEC Business Connect program. We have about 200 businesses, local diverse businesses, who are in the event production space. So we're specifically focused on people that we can help in the area we can help in, which is event production. And what we do is we're their advocate, we're their ambassador. We host events for them to help them to raise their profile, help them with their marketing, but most importantly, we help them get a foot in the door for these opportunities and then give them feedback if they don't get them. So we can't get them I always tell them it's your job to get the business, but it's my job I'm your agent, unpaid agent, to get you in the door so they have the opportunity. So we're always pounding on these events who come here that you have to use our local businesses. Otherwise, if you're bringing in companies from around the country, and I get that they have to do that sometimes, but you're not helping us. You're not helping our local economy. So we can't do these events unless you're going to give back and help that. And we've expanded that program to not just focus on the Super Bowls and the college football playoffs and the US Open. By the way, those have all been great partners to us in making sure they give opportunities to the local businesses. But we've also gone to our partners, and I'll go to everybody here today who has companies that might put on events, who need suppliers. Please look to us. You don't have to, I always say you don't have to hire the Business Connect ones, but just give them a shot and see, rather than just going to the usual suspect.
I wanted to also get your opinion. There's the front side of what we see on TV and when we're watching the Super Bowl or the World Cup. But there's also all of the planning that you have to do logistically. So what kind of keeps you up at night when you're thinking about issues that could happen with the World Cup? Is it transportation, security? What are you thinking about?
Everything keeps me up at night right now. Financial, we need to have a balanced budget at the end of the day. And when I say balanced budget, we could do it at a very low cost, but we want to do all these legacy programs and marketing. We want to take advantage of the opportunity. So that's keeping me up at night. We've been very lucky on our operational planning, because what we came up with in 2020 before we hosted the 2022 Super Bowl is we said we have this whole decade of events, like you mentioned earlier, starting with the 22 Super Bowl, US Open, NBA All-Star, World Cup, Super Bowl, another Super Bowl, Olympic and Paralympic Games. Let's not recreate the wheel each time. And most cities who don't have a sports commission like us will put together a host committee for a major event, and they will hire staff. They will do all the operational stuff. They'll raise money. They'll put on the event and then do the legacy programs. And then when the event ends, they disband, they scatter. All that institutional knowledge is lost. And so when they have another event in 4 or 5 years, but another major event, they have to start all over. We realized in 2020 that we were going to have a major event every single year. And in some years like this year, we have 3 major events coming. It didn't make any sense to set up separate host committees, set up separate entities, start over each time. Why don't we build off of the knowledge from 2022? So then when 2028 hits and we're hosting the Olympic and Paralympic Games, we know what we're doing. We have a team who's worked on all these events and kind of worked out the kinks. So that's what we created, this kind of super host committee where we have the same operational team interacting with the police and fire and all the operational pieces and working out the kinks as we go, because our goal is to have a safe and secure event each time, but to make the visitor experience better and better, because this is all about bringing people here because they may have come for World Cup, but we want them to come back and spend their money in our city. And we want them to have a good experience when they're here. And what are we going to show them when we're here? They need to be having a good operational experience.
And so just building on that, it's not just the event itself, but you're creating fan experiences beyond the event. And many of those experiences are free. So can you tell us about, what fan engagement you're planning for the World Cup and, how you make it LA centric?
Right. So we have 2 audiences. And again, it's not about the 8 matches. It's how do we bring the community together around this? So we have events happening leading up to the World Cup, and then we have events happening during it. But what I think people don't realize is a lot of people, majority of visitors who come here for World Cup will not go to a match. They just want to be part of the excitement. And so that's one. And number 2 is a lot of people who come here don't have the kind of money it takes. The tickets are expensive. I can't believe anybody hasn't read anything about how expensive sporting tickets are. But they want to be part of the excitement. They want to be here. And especially if they're following their country, they want to be around other fans who have a similar passion. And so what we wanted to do during the World Cup is make sure and create places where people could do that. So we're going to have a fan festival at the Coliseum for the opening week. That's everything soccer plus the viewing parties, et cetera. That ticket will be somewhere as cheap as possible. Kids will be free. And we do have to charge something for a ticket. Otherwise, when you do events with free tickets, you don't have no idea how many people are coming and you can have a disaster on your hands. So you want somebody to have a little bit of skin in the game on that. So we'll do the Fan Fest. We have 10 official fan zones that'll take place throughout the region, because what we decided was, unlike in other FIFA World Cups where they had the fan festival going for the entire tournament, the entire 39 days, we didn't think it was a great idea to try and run a fan festival for 39 days in one place in LA. LA's too spread out. So we have fan zones going on in West Harbor, in the Valley, out at the Fairplex. I mean, we've got 10 official fan zones.
And those are all free?
Those will be very inexpensive. We've asked them to be free, but they may have to charge to recoup the cost of just hosting it. So none of them are for profit activities. And then the most important thing I think we're doing during the 39-day tournament is we are promoting any soccer themed activity that's happening in culture, in museums and cultural hubs around the community, because what we want visitors to do is not just go to the beach and not just go to the fan zone. We want them to experience LA. We want them to know, and sometimes it's hard to find that. And so we're promoting a 39-day fan engagement calendar that where anybody, and we've been out, our head of stakeholder engagement's been out talking to the museums, talking to all the community stakeholders. What do you have going on in your region? What can you do? Can you make it soccer themed so that the World Cup, we can tie it all into our World Cup story and get people to visit other parts of the region. So we're heavily promoting that. And then leading up to the World Cup, we've got a free Grow the Game soccer clinics for kids. We've been training officials. We just had a youth clinic last weekend. We'll have another one. We're doing community days where we're doing beautification projects. Our next one is next Saturday downtown, where we've got 11 giant soccer balls that people are going to paint and themed around the countries that are coming here. And we're going to put them in different places around LA that are just kind of welcoming activations that'll be art projects that will be stationed around the region. We have a mobile bus tour that's kicking off that's going to go to different events. You'll see it pop up that just, it rolls up and it rolls out all these soccer activations that are free that people can do in tailgate parties and things like that. So we have a lot of stuff going on, but our main message to everybody is, one, we're welcoming, this is our opportunity to welcome the world. And what is the message we all want to send to people about Los Angeles? Because we have major media attention over the next 6 months. Oh, is that our video? I recognize that song. We have major media attention. It's our chance to remind people why LA is a great place to be.
Okay, and so we've recently launched a new sports program here at UCLA Anderson, and there's a lot of interest from the students in sports, as you mentioned. With all these events coming to LA. LA is a major sports city in the world. So there's been classroom activities where we've had discussions, and one of them has been what it costs to put on a major event like the World Cup. And with the Olympics specifically, there's been a lot of discussion about, are host cities benefited by, like hosting something like the Olympics or the World Cup because of so much infrastructure that needs to be built typically, and all of the money that goes into putting on an event like this. So what is the biggest financial risk for the city of LA?
Well, every deal is different. So as an example, for World Cup, the city of LA, if you're talking about the elected, does not have any financial responsibility. The host committee is raising all that money. The Olympics have a little different model, but I think what people have to remember is, again, using the sport for the greater good. It's not about, are you a fan of what's happening on the field or the matches? It's how are we using all the media attention that comes by bringing this here, and that's, you asked me earlier, what keeps me up at night. One of the things I worry about is that we aren't taking full advantage of the next 4 months and then the legacy afterwards, but to really tell our story about Los Angeles. So we're working really hard to make sure we are promoting public transportation as an example, because we are a car city. We know that. But everybody who comes here, all the international visitors, are used to using public transportation. So Metro is one of our partners. We are working very closely with them. How do we take advantage of people who come here who actually are used to taking public transportation and kind of change the narrative on transport? But again, making sure we use these opportunities that we have, that we worked really hard to bring this event here. We're working really hard to deliver a safe and secure event. How do we showcase our city in the right way?
And so if you're thinking about ROI and how you measure the success from your perspective, William had presented some bumps in tourism dollars and things that happen. What metrics are you looking at to say, like, this was a success when you look back next year or 5 years from now?
I think hotel room nights is a really easy one to measure. Media impressions, media stories, what we're getting, because that is going to have long-term benefits. I think those two. And then what opportunities do our local businesses get to profit and get contracts around these events?
And so how about the legacy of hosting an event? So when we look back, we say, okay, the World Cup in 2026 or the Olympics in 2028, how do you think about the legacy and what are you putting in place to kind of say, okay, this is what we accomplished?
Right. It was really important to, so let me back up for a second. I think what I always love hearing, people always come up to me all the time and tell me like their favorite from 1984, what they remember, or 1999, the Women's World Cup, or some major event that they were at with their family that made an indelible impression, made a memory for them. And so one of the things I'm going to look forward to seeing after World Cup is the memories that are created for people, not just the people that went to the matches, but people maybe participated in our clinics or community day or went to our fan fest or fan zones, that they did something really cool, really unique with their families that they wouldn't have had an opportunity to do if World Cup was not here, because the majority of people who live here probably wouldn't have traveled to a World Cup in another city. And now we're bringing it here and giving them a chance to participate. So I'm looking forward to that. And I'm looking forward to that great feeling. If you guys remember the last time World Cup was here 4 years ago, I remember being in a bar, I mean, it was just a different vibe in our city. Everybody's excited, and it's just, the sports really does bring out the best in people. And I think everybody just getting excited, their flags. I think it's going to be a really great 39-day tournament in our city, a 39-day period in our city. And I'm looking forward to people having great memories of that.
Okay, so let's turn now over to the Super Bowl. So we're hosting the Super Bowl in 2027. This is the second Super Bowl in a short period of time. How did you manage to get 2 Super Bowls, almost back to back? And the Rams look like they're going to be a Super Bowl contender. Last time they were also a contender. So are you the good luck charm for the Rams?
This is Hollywood, babe. This is how the story is written. I think we had an incredible. First off, we have an incredible stadium in Hollywood Park. You all know. I mean, who wouldn't want to come back here quickly? Number two, what the leagues are looking for, any of these events, they're looking for, one, they want to make money. Two, they want to have a good guest experience, and they want to grow their sport. And so we have this amazing stadium. We had this in 2022. You couldn't have asked for a better, other than COVID. You couldn't have asked for a better Super Bowl experience. I remember walking out of the stadium after the game thinking, and I was so tired because we just been, long run putting these events on. And I remember thinking, I don't think I'm going to be here for the next one, because I don't see how we could top what we did in 2022. If you remember, it was like 80 degrees that day. I mean, it was one of those Rose Bowl picture perfect January 1st days. The city looked amazing. Full stadium. COVID was over, essentially. People were not with masks. And then we had our home team, the Rams, in the stadium, went down to the wire. Great game. They won. I mean, how can you top that? But when we looked at, so the NFL had a great experience. They made a lot of money. They had great visitor experience and a great game. So they want to come back. They want to come back to our stadium. And so now we're looking at, okay, how do we top that? I think the Rams winning again would be great for our story. So very hopeful and putting that all on Kevin Demoff to get that done.
The sports betting lines are changing.
Exactly. But what we didn't get to do in 2022 because of COVID is we planned in the bubble. My whole staff worked in the bubble from 2020 to 2022. All the things we wanted to do in the community and things that we had ideas and that we wanted to do were all, TBD. If you remember, everything you never knew day to day, if you could do it, you could not do it. So that was a challenge. I'm looking forward to planning a lot of stuff in the community and activities that we can do not in a bubble.
Okay, and let's move to the next big event after that is the Olympics. So I understand that there's a lot of partners also with the Olympics, and LASIK is not the controlling partner, but you're part of the overall machine. So how do you view your role within that group that's putting on the Olympics?
I think it's really important, and we have a very close relationship with the LA 28 team. They're doing a phenomenal job, and they're looking to us for learnings on what we're doing. So these fan zones, official fan zones that we're doing at World Cup, they're going to be doing something similar around the Olympics. So any learnings that we can pass on to them, programs that we're doing that we can help them, because they're stood up for just the Olympics and then they close afterwards. And we've been around for 30 years. They love that input. but also very important to them that we have a successful World Cup in 2026, because if our World Cup is not successful here, it doesn't look good for 2028. It's just not a good message, which I always tell people, we need to be successful. We need to show the world a great story about LA to help. The World Cup's a big event in and of itself, but also to help the 2028 story, because it is all about the road to 2028 and all these other major events along the way.
Okay, so this will be the last question for me, and then we'll open it up to the audience. But as you mentioned, there's no host city that's had these kind of three major events, Super Bowl, the World Cup, and the Olympics all back to back to back. So how do you view LA's new position on the world stage? Is this going to change the way that the world looks at us?
I think it's an incredible opportunity we had. I heard another speaker earlier, I think it was Rick Caruso, talk about, we had a kind of a crummy year the year before. This is a chance for us to remind people that we're open for business, that we are vibrant, that this is a great city to come and visit. So yes, I feel like this is a great chance to tell the positive story of LA, because we are on the international stage for 3 years, and keep reminding people that this is a great place to come and visit, because tourism is like the fifth largest employment sector here. We need to continue to drive tourism to our city. And we need to remind people that, start your World Cup journey in LA is one of our tagline for the World Cup. And remind people we want them to come visit, and everyone is welcome here.
So are you going to just take 2029 off because you've had such a hard decade?
We're bidding on the 2031 Women's World Cup. We're bidding on Rugby World Cup for women and men. So there's a whole bunch of other stuff, but it does seem like it's a little anticlimactic after 28 to have that run. We're gonna have to work really hard to make sure we continue the momentum.
Okay, let's open it up for questions. Yes, please. We'll get you a mic.
I'm so sorry about that, but thank you so much for being here, Kathryn. My question is in relation to LA 28. So in the US, sports tends to be a lot more commercialized than in other regions. There's ads, sponsors everywhere. So I'm curious to know how that tendency and maybe institutional knowledge can give LA an edge, and even how could it impact its profitability, whether it's on a balanced budget or in a surplus, optimistically.
So I'm sorry, were you saying how does the institutional knowledge give LA an edge?
Yes, like knowing that US sports tend to be a lot more commercialized.
Yeah, I think what's really been helpful. I mean, the good news is LA, we are a big event city. And this is one of the things, by the way, back to your earlier question about FIFA, one of the things we remind FIFA of, this isn't our first rodeo. We've done major events here. We know how to do them. We have amazing operational teams in place at SoFi all over the city. Everybody knows how to do it. So the institutional knowledge is great. It's just sometimes having the same people in place for long periods of time to be able to share that is important. So I think that's a huge advantage for us, and that will help the LA 28 team as they, look to close and balance their budget and hopefully generate a surplus like what was done in 1984.
Other questions?
Hey, Kathryn, thank you for being here. I kind of have a fun question for you, and I'm happy to have you chime in too. Out of the 8 soccer matches coming up, the Super Bowl and the Olympics themselves, do you have a 2 to 3 favorite events you're looking forward to, or a sport that maybe, first-time viewers should look into?
Great question. I'm looking forward to the opening U.S. men's national team match here. I think that's going to be a really great moment for our city. So I think that's my first, number one. Number two, I'm a huge NFL fan. So having a Super Bowl come back here is just a dream come true. And then obviously the Olympics. I mean, there's so many pieces of the Olympics, but the opening, I'd say the opening ceremonies, that's the usual, everybody's usual answer. I can't wait to see the pool that is going into SoFi Stadium and see swimming at SoFi Stadium. I think that is going to be unbelievably cool.
Yeah, and I guess I'm looking forward to seeing UCLA be the Olympic Village, right? To have all those Olympians here. And my understanding from the organizers is that usually the athletes stay, like very dispersed, but because our dorms are, they're actually going to be staying in the dorms because the dorms, I don't know if you've seen them, but they're very high quality dorms, much better than dorms that I stayed in when I was an undergrad. And the food is also very good. So they're going to be in the dorms with dorm food, and everybody seems to be happy about that. And even the supporting countries, usually they're dispersed all throughout the city, the Olympic teams. So like if you're coming from, you know, China or India or wherever, usually the organizers from the countries are dispersed all over, but they're going to be taking over Greek row. So a lot of the sororities and fraternities are going to be hosting the countries. So, you know, we really are going to have the Olympics here at LA. So that's something I'm very much.
And what a
looking forward
great
to.
advertisement for UCLA. I mean,
Yeah.
to have great housing, great food.
Yeah. And I think they were saying also, they were telling me that on some of the events when they were just kind of scoping out UCLA, it just so happened that Serena Williams was practicing tennis, you know, on our court. That was not planned, just happened to be. So, you know, this is a great, you know, like campus and a great city to showcase sports.
So, quick question over here.
Yes.
Thank you both for great panel discussion. And Kathy, thanks for sharing with us all the good stuff that's coming up. And I'm curious about something maybe it's a bit more serious. We have a war going on right now in Iran. I think there are at least 1 or 2 tournaments are supposed to be playing right here. How will that, specifically the Iran thing, affect the games and your planning on it? And do you have any concern and any plans about travel restrictions from the Middle East out here, airlift, all that kind of stuff affecting us 100 days from now with respect to the games?
Yeah, so we have 2 matches with Iran at SoFi Stadium, and we're monitoring it just like everybody else. I don't have any information that you all don't have from reading the paper. So I mean, FIFA's monitoring, keeping an eye on it, but there's no new developments. If for some reason, and I think this is what you were asking, if Iran drops out, FIFA will substitute in the next team that's qualified. So there will be matches. It does make it a little hard to plan, especially for people who are trying to plan trips around those particular matches. It makes it a challenge, but planning is always a challenge, and it's always a challenge. You're always throwing these last minute curveballs. You just hope that you have 80% of your planning done so that you can deal with the last 20% of curveballs that are being thrown. And this world is, there's things going on every day that impact us. And so we're going along doing with our head down, doing what we can do and waiting to see how this comes out, and not letting ourselves go off and down little rabbit holes on all the different scenarios of what can happen until it's time to go down that rabbit hole and really plan that out. Otherwise, we're not going to get done the 80% that we need to get done. Lunchtime.
Other questions? Yes.
I'm really enjoying this, especially you're conjuring such wonderful, Kathryn, opportunity for us to really showcase LA to the world. And I really loved you talking about emotional ROI. Given that we did have a crappy year last year with the fires and the riots, and we have a lot of friends nationally on a conference I belong to, and a lot of them think we're just crazy in LA. Like, are there still riots going on? And, stuff like that is what I'm asked a lot when I see them. So what is your planning for, putting out more positive press leading up to all of the events, just to kind of counter that? And also, is our, president coming out to kick off the Olympics? Because doesn't seem like he really likes our state and or our city. So I just wanted to ask you, given the geopolitical environment, what are some of the things you're doing leading up to all 3 of these years being so spectacular that we could, especially in our own country, make sure people don't think we're all the radical, weird left people here.
No, it's a really great point. I mean, you hit on so many things that we talk about every single day, and people do think we're just nut jobs out here, and our city's not open, and we're just running around, and there's all these demonstrations going on, and that's all LA is. And so it's just a matter, and frankly, that's clickbait. It gets more media attention than the good stories. So we have to work a little bit harder to tell the good stories, but we've engaged our media partners. We've got several media partners, iHeart, Telemundo, Fox, and they are committed to tell the good stories. So as a matter of fact, one of them said to me the other day, because I always like to know what they're calling about for an interview. And they're like, no, we are committed to tell the good story. So that takes actually a little higher level of commitment because you probably have a little less viewership on the good stuff than you do on the bad stuff. But they're coming out for our clinics, they're coming out for our community days and showing that the city looks great. Trying to showcase different things happening, different activities that they can do where things look great. We'll showcase our fan festival where everybody's coming together to watch matches, things like that. I think the fan fest and the fan zones will be great. Commercials, Fox has already said they're going to station themselves at each of those locations and they want to show live shots of everybody coming together and rooting on their team and just being a fan and all the good stuff. So we have to work a little harder for the good news, but it's worth it because we do have a lot of good news to showcase. You just have to get people behind you who want to support that.
Yeah, if I can just build on that, I'm part of my research is I do branding and, kind of the branding of Los Angeles as a city and the way that people think about it. And as you mentioned, a lot of people, especially on the East Coast, just think that we're a bunch of crazies out here and with an occasional earthquake, to spice things up. What people don't realize is that LA is such a vibrant quilt of different communities from all over the world that we host. We are the city that has many of the world's largest immigrant populations, like in just country after country after country. Outside of the country, we have the largest, Persian population. We have the largest, I can go through a list of cities. And two international events like the World Cup and the Olympics back to back, I think will bring that out and change the way that people think about Los Angeles. Because as Kathy has said several times, it's not just the fact that we're hosting these events, we're hosting them back to back to back. And so I think that back to back to back and kind of like in the advertising world, that's like a pulse, right? That we will be at the center of attention for 3 years in a row. So hopefully it will change a lot of minds. Yeah, I think we have time for one more. There is one.
For all the commentary, is there a reason why? I mean, a lot of discussion going into Milan was how some of the rinks and the infrastructure wasn't established. Why is it that some of these Olympic cities don't follow the LA model of using kind of regional infrastructure that currently exists to forego some of that infrastructure costs and overwhelm and the chance that it's not set up and ready for the games? That it went off at seemingly fewer without a hitch, but there was certainly a lot of consternation leading up to the games. And we follow the 84 model, we should be well set for local infrastructure to carry the day. But
Our no-build Olympics will hopefully set the tone for future ones. I mean, it's such a great story that we're using existing. I think also creating new venues in some of these cities that people want they want the showcase, the opportunity to show off their city. So that's why they go after it, even if they don't have the infrastructure. We're very lucky that we do, and it's going to be a great story to tell. But I also feel like all these events should be using the media spotlight to shine a light on what's already here and not what we're building or trying, and building these buildings that aren't going to be used. You're going to go see, with cobwebs all over it later. But one last thing I would just say is that's one of the things that we are trying to do as the host committee and this continual super host committee is not create, new legacy programs, but rather shine the light on what's already being done in the city. So as an example, when we led up to the Super Bowl 56, we chose 50, instead of creating a new legacy signature program, we said, okay, let's shine the light on 56 nonprofits who are already doing work, maybe who have budgets less than $1 million, most less than $500,000 a year. Let's use all the media attention we're going to get and shine the light on those who are already doing that work, lift them up so they can continue to do the good work that they're doing. We partnered with the LA 84 Foundation, which, is the legacy organization from the 1984 Olympics, who does this every day and that's the work. They know who's doing the work. They know who's doing a good job. We partnered with them, picked the organizations, gave them a grant, did promotional videos, and used all of our media attention to the question that was asked earlier, how we can tell the good story. Fox actually did a series on profiling these community champions who are doing the good work and telling that story. So that's our job, to shine the light on who's already doing the good work in our city and lift them up, not create something new, not stand up something new just for World Cup or just for the Olympics that's going to go away afterwards. Why don't we showcase the cultural institutions that are here and what they're doing, and that's our responsibility.
Okay, I think we're out of time. Thank you so much, Kathy. Really appreciate it.
Thank you, Kathryn. Oh, hello. All right, thank you, Kathryn. Thank you, Sanjay. This wraps up our conference. So first of all, thank you all for attending. And as one last time, I'm also going to thank our sponsors. We are a public institution, and we could not do this without the private support of our sponsors. So at the principal level, we have RSM and Yamaha Resort and Casino Sunwell. At the law firm of at the platinum level, we have the law firm of Allen Matkins, Cathay Bank, the Federal Home Loan Bank of San Francisco, Mercury Insurance, and University Credit Union. At the gold level, we have Alaska Airlines, Bank of California, Hub International, Leap Development, Numo, PNC Bank, Robert Half, and SMC Manu Bank. At the silver level, we have Slalom, US Bank Private Wealth Management, and Wilmington Trust. At the bronze level, we have Active Security, BMO, HDR, the Port of Long Beach, Q2, and Shawmut Design and Construction. And finally, at the Bruin level, we have the Fifth Third Bank. So if you do not see your name or your company's name up there, we can fix that. So please reach out to us. All right.